Hello everybody, this is Drew Demon, the Devil's Stockbroker. Welcome to the stream. Just getting started up for the morning, so excuse me for the delay while we got everything set up. And there we go. All right, so here we are. It's finally arrived. We have AMC APE sitting in our portfolios. We're happy with our combined shares of AMC and APE, I hope. Well, hello, Britta Krug from Germany. Hello from the Americas. I'm sorry. It seems like a lot of the European brokers are still having some trouble settling APE shares into the portfolios. I've been hearing a lot of problems, especially from the German brokers. Well, today we're doing a special kind of stream. Since there's a big community event going on here with the dividend of our APE shares, I decided to open this up to the trading floor. So everybody in the Discord's welcome to speak up. Just make sure to behave yourselves and observe proper microphone etiquette. And try not to let too much degeneracy enter into the YouTube airwaves. So here we currently are. Well, this is a hilarious chart. Seeing the split value between AMC and APE like this is a bit strange, but I'm placing the value of AMC and APE split at roughly $9 between the two of them. So this is right about where AMC was trading at Friday close. Shouldn't our AMC average open price be adjusted accordingly? I'm not sure what you mean by that, Howie. Can you explain? This is disappointing. Look, it's not. It might not be exciting. Charts move slower than we like them to, but I mean, it's not like we were expecting it to just go set off like a rocket first thing in the morning, were we?
TD, can you discuss how this preferred share, even when it's bought and sold, how it's eventually allowed to be converted into an actual AMC share? How that happens and when?
Yeah, absolutely. That's a fantastic question. So, APE is currently set up as a preferred equity share, which AMC already had received permission to do this back in 2013 from its previous shareholder meeting where they voted to add additional authorized shares of AMC. And that decision gives them free reign basically to issue up to 5 billion, or I'm sorry, was it 5 billion? I think it was 5 billion preferred equity shares. They're not going to do that this year or even next year, but they do have up to 1 billion APE shares that they can issue in the near term. And there's a lot of concerns about the conversion over to AMC shares. As Adam Aarons said specifically, that will require a shareholder vote. So that the way that if the question comes up in the future that shareholders or if the board of directors at their discretion decide that they want to convert APE shares into AMC, then what they can do is host a shareholder vote where shareholders will make a vote on the decision to convert APE to AMC. Since APE and AMC are both equal in their voting rights, that's one share equals one vote, the conversion is a pretty simple process. It's rather straightforward. If the vote is approved, then all that would do is just simply convert APE to AMC, and then after the scheduled conversion date, APE would be joined into the AMC float, and the value of APE would be added back to AMC at that time. So you could speculate that if APE started trading at like way up into the stratosphere at some point in the future, then it's actually possible that that conversion to AMC would increase its value. Conversely, if APE was trading much lower than AMC, say half of its value, then it would be converted to AMC and reduce its value by roughly 1.5. It would reduce it by 1.5 times. So AMC's value, if it was, say, if APE was trading at half AMC's value, that would basically divide AMC's value by 1.5.
So is it safe to assume as a result of that, until a vote like that happens and gets approval, that the APE shares can't be used sort of with the from the options chain to have an impact in covering or on AMC?
That is correct. So if there was any fear that this would create a dilutive effect that would allow shorts to cover their AMC naked shorts, that's actually not the case. If anything, the creation of APE has actually created a situation where shorts are now in a worse situation because they have to deliver APE shares to their lenders as in accordance um, with the short selling rule that dividends are that the lenders are entitled to their dividends in whatever form they come in. So if it was a cash dividend, it would have to be paid directly in cash to the lender. But in this case, since it's a equity dividend, the lenders are entitled to shares. So, depending on brokers, some brokers may allow shorts to provide cash in lieu of a dividend, but in this case, that does not seem to be uniformly allowed. So, shorts are entitled to purchase a share of APE from the market and deliver it to the AMC lenders that provided them with those shares. Now, what's the thing is that this is still subject to the effect of settlement time. And this is part of why my my thesis that if APE just goes absolutely bananas, pardon the pun, then there's a 2 day settlement delay where failures to deliver before failures to deliver happen in APE. So because of that, shareholders of AMC who are entitled to APE that have lent out shares, the short sellers that they sold their shares of AMC to need to go into the market to find more APE shares in order to deliver it to their lenders. And what can happen is if APE's price goes up because the shorts decided to wait and hope that they could get it at a better price, thinking that all of the FUD that was floating around on the internet would cause the price to collapse of both AMC and APE, that the short could possibly find the shares at a cheaper price. If the opposite happens and APE goes up, then they may enter into a scramble to try to buy enough shares. Excuse me, I got the hiccups. It's really interfering. So if APE goes up and the shorts haven't returned those shares to their lenders for the dividend, then the forced settlement time can actually put them in a position where they are margin called and they are forced to buy at market. And if the numbers of shares due are high enough, that can cause a very similar effect to a squeeze. And that's why this equity dividend is so painful for shorts. And while we may not be seeing it right now, it might not look that way. Understand that we're still subject to T+2 settlement. And right now, APE is trading at T+0 settlement because all of the shares are being, they've been entered into the market. The shares of APE have entered into the market and are being delivered at T+0 settlement time. So this is something that's putting a great deal of stress on the trading systems. So the trading is much slower or the trading is expected to settle much faster for APE shares than the system is. I would say that it's designed to handle it, but it's not been fully tested, and it's part of the reason why the markets don't trade at T+0 settlement time. That's real-time settlement. Because there's the fear that if they actually started doing that, then it would cause the entire market to break down from all of the trading volume. So I see everybody. I see a couple people in the chat that are freaking out about the price. Like, don't freak out, okay? AMC started trading at $9 because the value is being split between AMC and APE. Okay, and that's just simply by doing AMC plus APE, you can see it's trading at 18.50. That's basically the same price that AMC was trading at Friday close. So let's not exaggerate. Yeah, there's a lot of fear, uncertainty, and doubt going around here. So guys, understand that the rocket has to move to the launch pad. We have to go through all of our pre-flight checks. We have to make sure that everybody is seated and buckled in safely before we launch to the moon. So please be patient. The stock market doesn't move as fast as we do. If we want to see AMC and APE skyrocket towards the upper stratosphere and head into orbit before we make our transfer burn over to the moon, you need to allow time for that to occur. Exactly. We are fueling. Stand by. By the way, if you're just joining us for the first time, welcome to Hell's Trading Floor. This is our live stream where well, I won't say every day, but I try to be here as often as I possibly can to share all of the good information that we have at Hell's Trading Floor, along with all of the tickers that we cover, all the news on real-time market data and financial investment news, macroeconomic events, so on and so forth. And we try our best to make it entertaining and fun as possible. If you're interested in being part of the conversation, we're actually doing this live in our Discord right now, where everybody is welcome to step up, ask questions, and participate in the conversation. If you want to be a part of that conversation, you can join us at discord.gg/Hell's Trading Floor and follow the join instructions, which will take you to our Patreon page at patreon.com/The Devil's Broker. And you can join in and join us in Hell's Trading Floor voice chat, and you can come and talk to me. We can chat about AMC, APE, or whatever tickers you want. Hey, General Disarray, thanks for the $10. Really appreciate that, dude. Go get some APE with this so it'll cause liftoff. All right, dude. I can already see AMC and APE's combined values moving up to $19 right now. So let's actually put them both on the chart separately. I'll go ahead and put them on a line graph, and we can see how they compare.
Catching a bid. Okay, Amy.
Yeah, look at that. APE is moving up to 759. APE is starting to get volatile, dudes. APE is getting volatile, my dudes.
Ooh, I like the size of those. Wait. Oh, yeah. And you know what was crazy, TD, is this morning they were halting AMC with no reason, and they were claiming volatility.
Yeah, I saw the reason code was M for the 10% within a 5-minute candle, and I'm like, this didn't trade 10% in 5 minutes. What the fuck are y'all talking about? And it's hokey. It's hokey. I think that the real time settlement might be the cause of it, at least partially to blame. But I agree, that was weird.
Buy signal on the 3.
It's about to hit buy on the 5.
This is nice. This is nice.
Shout out to everybody who can buy calls right now, and then if they really want to exercise them on their ass. Dirty.
Hey TD, I tried to set my sell limit for my APE at 10,000, and Fidelity wouldn't let me.
Yeah, it's okay. They're not going to let us do that. I know that I was saying that in the trading floor. I should have said, like, it's a joke. You're not going to be allowed to do that, but it would have been funny.
It would have been nice.
Because who knows? Maybe there's a short just being force liquidated, and the computer just wouldn't care. It'd be like, well, this is the only share that we can get. You're getting it.
I'd have loved it.
I imagine if I had sold 100 ape at $10,000, that's $1 million, by the way. Oh man. I'd basically just quit trading for the year and go on a long vacation. Just go head out to the Bahamas. I gotta say, I really am liking the volatility in ape right now. It's bouncing pretty hard. If you're watching here on screen, we got ape in the blue line, and we've got AMC in the orange, sitting side by side, and then the ticker on screen, AMC plus ape, is showing you their sum value of what they're trading for combined on the exchanges. So, I mean, you could take your pick with AMC or ape if you're asking which one to buy. Not that I'm telling you to buy either one; it's up to you. But both of them are equity in AMC, the company. So, as far as which company you're investing in the same one. The difference is AMC is still trading options, but APE is currently not because it's now settling into accounts. So, options are not available for it yet. It's probably going to take a few days, at least 3 or 4 days, before options become available on APE. So, that's one thing to consider. The other thing to consider is that APE is now settling into accounts in real time. So the trading that's happening here is happening in real time settlement. That essentially means that the brokers are having a hell of a time keeping up with it all. So this is creating a lot of volatility and stress on the trading systems. And this could be partially for the reason for those volatility halts that we saw earlier today. I would say that if you're buying APE, expect volatility. With AMC, it could get just as volatile, but I suspect AMC will be more stable. The other thing to take note of is that APE shares are only going to be traded in the market according to what's available. And because of that real time settlement, rehypothecation of shares cannot happen right now. So the delivery of shares, anybody buying APE is going to be doing more work towards locking up the float. And as we are all aware, the float for AMC and APE are matched at, I believe the number is 514 million plus change. Somebody keep me honest. Maybe TradingView can keep me honest. But in any case, the choice is yours. What I would say is if you're planning to hold for the long term, recognize that AMC cannot be diluted, but APE can. So know that that risk is ahead of you. But if you are investing in the company for the good of the company, by investing in APE, you are helping AMC provide cash to its balance sheet, and that will improve its financial outlook for the future. So while dilution is possible and even likely in the future, it's probably not going to happen within the next several months or even this year, but it will help AMC fight the good fight, stay in business, and make additional acquisitions in the future. Is there any way to combine prices on TradingView? Yes, it's actually right here on my screen. You can do AMC plus APE. You can do this with literally any ticker. Just do one ticker plus symbol and the second ticker, and it adds them together. You can also do divisors as well. I've seen this done, which is pretty cool. You can actually like divide indices, like the IWM divided by the SPY, and you can actually see how they trade versus each other. And you can use this as an additional technical indicator to determine how the market is responding on small caps versus the broader tech market. It's a pretty cool technique for doing some very interesting market analysis. And as you might have noticed on the 1 hour, we're actually doing a little bit of a crossover on the MACD. So the IWM might be looking to flip on the SPY and diverge from it. So this is an interesting way that you can spot divergence in the market in the IWM for the SPY. When they're trading flat like this, it means that they're moving together. When it's going up, this means that IWM is going up while the SPY is going flat or down. And when it's going down, that means that SPY is going up while IWM is going down, or at least one is going faster than the other. It's an interesting analysis technique that I've been kind of playing around with and looking at. So, yeah, it's kind of cool. Anyway, back to AMC and APE.
Hey, TD.
Hey, Scrap Queen, what can I do for you?
I was just wondering if you heard that AMC is, I guess, showing a free rescreening and giving 2 tickets to Investor Connect members for this Friday to see King Kong versus Godzilla.
That is awesome. I would love to go and see that movie. Thank you very much, Mr. Adam Aaron, the Chief CEO, Chief Executive Officer of AMC, for the free tickets.
I'll repost the info in chat so you can see it.
That would be fantastic. Thank you so much. Hey guys, if you're new to the stream, welcome, welcome. This is Hell's Trading Floor live stream for the market. Currently, we're covering AMC and APE, given that there's a pretty important dividend happening this week. If you're interested in getting more people in here just to show off the cool due diligence and research that we do here, please consider retweeting this stream, letting people know that we're here, that we exist, and that we're here to cause just a little bit of mayhem, raise a little bit of hell in the markets. Hey, Jim Ryan. If I look at the GME chart, every year for the last 6 years, GME has had a big move up this week. Is that a fact? Well, let's go take a look. So let's see. We've got August 2022, August 2021. Interesting. Yeah, you're not kidding. Looks like GameStop went on a run every single year during the last week of August. That's kind of interesting. That actually kind of inverses what the SPY normally does in the last week of August and first week of September. This is actually a seasonal period where a big sell-off occurs in the broader markets. But yeah, I do see that price action. Seems like GameStop has a little bit of a pop every single time on the last week of August, and gets a little bit of energy in it all throughout the first 2 weeks of September. And it's interesting, that actually started the run that brought GameStop towards its squeeze level all the way out through till the December holiday season, and then finally culminated in the mighty squeeze to $450 that happened on January 21st. That's pretty cool. Thanks for that bit of information. I did not realize that. Seems like we've got a little bit of seasonality trends working on GameStop. That's pretty cool. I'm gonna not delete that trend line because I want my channel. I want to see my channels. Why are my channels messed up, actually? It's kind of annoying. Okay. So oddly enough, GameStop is actually, now that I look at it, starting to show that it is finding some support here above $33.50 or $34. This is, and it's also printing an inverted bull hammer. This could be a reversal candle for the week. We're just getting started, but it looks kind of nice. And since it's starting to show this strength here above this trend line, this could indicate that GameStop is getting ready to make a bounce here. The one thing to be careful of is that we do seem to be forming this head and shoulders here, so just be wary of that. If we form another shoulder and then break the neckline here, then GameStop might have to retest this trend line before it finds strength again. Let's go take a look back at AMC and APE. I'm not going to do too much technicals on this one because there's not much to talk about. The one thing that I do know that we have is we do have a very strong technical support at $9 or $18, which is divided between the two of the tickers, $9 each. For AMC, which is trading at 11.36, that price would be at around it would seem like $11 or 10.50, and APE is trading at 7.40. So $7 between 6.50 and $7 is where APE's big support is at. Thanks, guys, for joining the live stream. Really appreciate having everybody in here. If you wouldn't mind going ahead and sharing this link around on Twitter, that'll help bring in some people. And be sure to leave a be sure to leave a like. Excuse me, if I could just find my English somewhere. We can bring in a few more people into the live stream and make the YouTube algorithm like us just a little bit more.
Did you say you were looking for an English?
I was looking to find my English. Unless you want to be my dictionary and my mouthpiece, Dave.
I can be your English if you want. Yeah.
Blessed Little Cotton Socks is our official English for Hell's Trading Floor. He's just the resident Englishman.
Resident in Wales, though.
Resident whale. I love this place.
Resident in Wales.
Oh, resident in Wales. Man, we have way too much fun here in the Hell's Trading Floor. All right.
Hit that Rev up there at the top, TD. Please, sir.
Oh. Oh, dear. Is revving up?
Oh, no, I was just wanting you to look at it.
Oh. Well, hey, it's looking pretty strong, actually. I like this pennant. Ooh, I do like this pennant. Look at that strength. Hello, Revlon. Look at it, wicking up, trying to break through that resistance, getting some strength in it. Y'all, I think Revlon's going to get ready to take off. Let's see if it can break $10 this time.
Ooh, let's go, Rev.
While we're talking about, while we're waiting for Revlon to take off and while we're waiting for things to get interesting with AMC, let's go take a look at the broader markets. We've had a couple of other things that we've been analyzing here at Hell's Trading Floor, and I want everybody here to know that's watching in YouTube land. We don't just cover the meme tickers, we also cover broader stock market events and the major indices. One of the things that we've been paying very close attention to is the likeness of the SPY to the 2008 Great Financial Crisis crash that occurred in September. Two of the biggest moves that I've been analyzing is the move from the dip before the top and the ultimate top in the SPY, which actually resembles these two moves that we've had here so far. And then we had this one top before a great dip and fall. And I wanted to map these out because it feels like we might actually be experiencing some of these moves right now. So these are both on the weekly chart. And as you can see, for both of these moves between the 2008 crash and the current move that we're having now, the great crash that happened in September. Well, I just realized that I have not properly drawn these. I'm kind of expecting that the SPY is going to have this big sweep before the final crash occurs. So we've been watching very closely what's been happening in the SPY and other major market indices. And because of the heavy weight of tech in the SPY, I've been carefully watching all of the major tech tickers as well as the NASDAQ. And I believe that given that Apple has been falling down from its top, along with Amazon, Google, Nvidia, and Tesla, the tech sector looks very, very weak lately, especially anything that is dependent or linked to semiconductors. So that's something to be on the lookout for. We're actually, I would say, net short for the most part across Hell's trading floor. I don't want to speak for everybody, but I have a feeling that just about everybody is short on most of these tech tickers. Currently, as you can see, the big mega caps that I have, these are the top 10 cap stocks on the SPY right now here in my watch list. And as you can see, they are all red. Most of them are down 2% on the day, some as high as -3%, and Netflix is down a whopping 6.5%. So right now, tech sector is getting pummeled this opening Monday. Not a good look for the market, and I have a pretty strong sneaking suspicion that the Jackson Hole symposium that's going to be coming out, the market is going to get talked down seriously hard here soon. Hey, Kirik, I am screen sharing, but I am screen sharing live on YouTube. So if you want to join the stream, I can get you a link. So if people want to actually watch what I'm doing while I'm talking, all you got to do is just join on YouTube. You can just mute the stream and listen to me here in the Discord. Yeah, that's right. SQs go. I'm actually pretty excited for what's going to happen in the market. I guess maybe excited is the wrong is the wrong word. I'm anxious. I'm very anxious. Kind of sitting on the edge of my seat waiting for the market to just fall off a cliff. Right now the market's been moving up at an insane pace, with Apple taking an escalator up to its previous highs. Let's get Apple's chart up here really quickly. This is definitely my biggest short play at the moment. Apple has been absolutely screaming, but what I noticed is that it's drawn a big megaphone pattern, and on this latest move, it actually drew a big butterfly cipher, and this is a extremely bearish but also extremely accurate pattern. So this is naturally the most natural move for this stock to make is for it to collapse back down to below its previous lows before the end of September. The move that it makes tends to match Fibonacci's. So if you draw a Fibonacci retracement from the lows, then what you'll find is it targets the 127 on the Fib retracement from the low to the lower high. So that would be this move here. This is a very bearish cipher pattern, and it's extremely accurate in the market. I've been paying much more attention to harmonic cipher patterns, and they've proven accurate. I'd say 70 to 80% of the time in the market, based on the analysis that I've done so far. I'm not sure what the majority statistic is, but there's other confluences that are working in our favor. For one, RSI is way overbought. Okay, we've been at 80 on the daily chart for over a week. The RSI came down hard today. We're going to be retesting the moving average on the RSI, at which point I expect Apple to hesitate before it makes another plunge, and we've just started crossing down on the MACD. So histogram is definitely losing strength, and we've only just begun to make the moves to the downside. Full disclosure, I have a short position in Apple that's relatively sizable, that's going out till September and December, if I remember correctly. I think I also have some August puts for Apple. So keep an eye on Apple. It's not the almighty stock that everybody might believe it is. And as a matter of fact, if we were to do the same comparison on Apple as we did with the SPY in the 2008 crash, I think you would find that they look pretty identical. So let me go and pull these up. Let's do Apple. Apple again. Let's take this one to 2008, 2009. Here we go. So let's look at Apple standing next to Apple during the great financial crisis. And when I draw this out, you're going to get scared. Just fair warning. If you like Apple, look away. So you had this big dip in Apple, and then it went sideways and down before it made its final capitulation crash. I think that Apple's split multiple times since this time, but when Apple had topped out in just 3 months, it lost 20% of its value. And after it had its last recovery, which I do expect there to be another recovery in Apple before it finally crashes, but once it finally tops out, it's coming down 50% in 5 weeks. That's how long it took when the major crash happened in August and September. And Apple, as a matter of fact, kind of kicked it off. So Apple's crash on the SPY was absolutely magnificent. And Warren Buffett then was talking up Apple like he is today. And I really do think the guy's wrong. I think that this is the wrong time to be buying Apple right now. You're buying the top. We've got quite a bit of downside ahead of us. If Apple were to lose 50% of its value from where it's currently sitting today, you would be buying Apple at $86.61. So that's pretty much my price target for Apple. Oh, thank you, by the way, Tempestuous Persephone, for showing the seasonality chart. I'll actually bring that up because that has a lot to do with what we're talking about. Let me bring this up. So the seasonality chart is actually extremely relevant in this situation. So we currently have an election year, which has a bigger effect on the stock market than people might believe. What this chart is showing is a statistical analysis of the average movement in the stock market based on different election years. The all years is the average of the stock market over each month, and as you can see, stonks normally go up. But during midterm years, stonks tend to have a little bit of selling pressure in going into the end of August and the first week of September. But right now, we're in the second year of a new Democratic president with a Democratic president midterm. And that puts these purple and red charts together. And you'll notice that both of them show August sells off big time going into September. And then in late September, we have a second fall until finally we begin to get a recovery rally in November. And the holiday rally is pretty common in the stock market across all election years. So after the elections end, or at least once they're finally coming up on the 11th, that's our election day. For those of you who are not in the United States, our election day is on November the 11th. That's about the time that we start to see the market rally, is the last week of October, right around Halloween, and then going into the week of the elections, a slight dip down going into the end of November, and then right after Thanksgiving and Black Friday, we take the hell off for our holiday sales season. Retail sector and also major consumables, consumer durables, consumer consumables, and consumer cyclicals do very well in the holiday season. So thanks very much for thanks for pointing this one out, Tempestuous Persephone. If you want to take a look at this, you can just Google it. It's called the S&P 500 Midterm Election Year Seasonal Pattern Chart. Let's go ahead and get back to the charts and take a look at what Rev is doing. AMC's been basing nicely. Here we go. Revlon breaking out of its pennant. That's good. That's good. That's good. I like it. So if you're just looking at Revlon, this is a breakout pattern, and we have a confirmation candle. So this is a good trade for me. Let me get my paper trading up here so that we can trade these together. So I'm going to take this one to, I'm going to set my stop loss to the bottom of this candle, and I'm going to trade this to $10. And that'll set me up for a nice 3.5 risk to reward ratio. I actually like that a lot. That's very nice. I need to execute this trade really quickly. It's just a paper trade. It's not like it's all that urgent, but we're doing it together. Come on, TradingView. TradingView. I can't believe I'm getting so frustrated over a paper trade, but like if I was actually trading this, I would be equally mad because it's going to make me miss my entry. TradingView. Why are you misbehaving? I'm getting so damn mad at a paper trading account. Come on. Thank you. Give me a late entry on this shit. Better fill my order. All right, we're gonna do a $500 risk on this one. So that's that's too much. That breaks my risk tolerance. It is just a paper trading account, but it's always important to obey your risk to reward ratio. Don't make me miss my fill. Come on. This is all TradingView's fault. Okay, there we go. I got my fill. So now we're entered into this little paper trade, and we'll see how it goes. These are fun because it helps you practice, and it gives you a really good visualization for how the market operates, and gives you a chance to get a little bit of experience working with a paper trading account or with a real trading account and obeying your risk to reward ratio. So if you're new to TradingView, you never seen this before. This is how I trade my paper trading account. I have another account with Fidelity that I use to trade these types of stocks, and you can set up similar orders and other like stop orders. So I'm actually going to try to scale in a little bit more. So I'm going to set another limit order down here for $50, and I'm only risking an additional 0.7% of my account. But because I've got this really tight stop loss, what I'm hoping to do is actually take a tighter entry and get a better risk to reward setup. So I'll go ahead and set that limit order, and we'll see if this candle comes back down to test the bottom of this triangle. That's what I'm waiting for. This is called, well, I don't know if I would call it dollar cost averaging, but this is kind of what I do when I trade these breakout candles. Sometimes I'll see them bounce off of the top of the trend line for the triangle pattern. So what I do is I'll get my entry on the breakout candle, and then I'll get another position a little bit lower with a tighter stop loss. It's still the same stop loss, but that allows me to take an initial bet of like $200 or $250, and then I set my limit right above the triangle. And if the candle retraces and I get a nice little re-entry in there, I get a tight entry, and I'm only risking an additional $50 because my stop loss is so small. And if I'm right, then it heads back up before I ever hit my stop loss. So this is a little this is a way of limiting your risk while getting nice entries. It looks like it's going to take off without ever hitting this limit buy, but we'll see how it does. If I don't get this, I never get upset because I have my initial entry where I'm willing to lose that much. But if I want a little bit more and I'm hoping for a better entry, then I can just get that little extra, skin in the game that I like to have to kind of lever up my bet a bit. So we'll see. We'll just go ahead and let that percolate. I'm going to go back over to the AMC charts and see where we're doing. Maybe I can actually draw some technicals on this thing for once. Okay, we've got a nice U starting up right here, but it's still very early. We're kind of just basing right now. On APE, it looks like we're actually forming a triangle, so that pennant could be good. We'll see how it does. I would like to see AMC plus APE hold up support at 1860 and keep moving upward. That would be an excellent development for this one. I'm going to go catch up on my Tesla bets as well. If anybody else is in the Discord that wants to ask a question, please feel free to come up. I'm having a hard time keeping up with with all the chat windows that I've got in front of me, so I apologize if I'm not able to see and track everything going on between YouTube and Discord. Mr. Boulay, feel free to interrupt me if I'm if there's a moment of silence and somebody's got a pertinent question.
Rev is at 9:45.
There we go. Looks like that entry is not going to happen. Woo! Look at that. See, now that's how you day trade. This is how you day trade. Look at that. I'm up 300 on my bet already. Do a little dance.
Ooh, 964.
Look at her go.
Rev is booming.
Look at Revlon go. Wow. All right. TradingView is having a conniption right now, and it's just absolutely just breaking. I can't even get the broker. I can't even get the paper trading brokerage to behave itself. I want to set up protection for this. Okay, I'm going to cancel that order. I'm going to set up protection. And at $10, I'm going to take... I'm going to take a 10% profit, and I'm going to let the rest ride. Okay. That is not what I meant to do. Oh, well, we'll just let it go. I have actual money in Revlon right now, but I've got options on Revlon. This is just a paper trade to show how I trade. I like to do this every now and then, just AC since you were asking. But this is how I would trade if my broker actually connected to TradingView. Fidelity. I blame Fidelity. They need to enter the 21st century. Their interface still looks like it's from Windows 1995. I think I was still in diapers then, showing my age. All right. That's a pretty tall wick on this candle, but let's see how this one reacts. This is some pretty stiff resistance right here at 950, so it's hitting this resistance right here. I was kind of expecting this. We'll see if it can break through. I'm pretty optimistic though. This one I think is this is a pretty strong move. Revlon is just so good. It's just so good. These swings, if you're a swing trader, like this is heaven right here. These are just amazing swings, like 20-30% swings in the price to the downside and the upside, and these head and shoulder patterns are just magnificent. But I've been just long and strong in Revlon for the last several weeks.
Oh yeah.
Where is the SPY going? I don't know if you're asking me that question or if you're just looking at the SPY's chart taking off to the downside, but let's take a look at it. SPY is basing right now. There's an ABCD wave pattern. This is a harmonic pattern. But it's based off of this pre-market wicking candle. I really wouldn't pay attention to this one. I don't think this one is very accurate. What I would pay attention to on the SPY is the fact that it's been it was forming a pennant here and it completely broke down. This bull flag that the SPY had formed after this long run, it just totally broke down, and now it's heading back to the downside. I think that the SPY has a long way to go now. On the 1 hour, it might bounce off of its. Oh, that's the 2 hour. Yeah, on the 1 hour, it might try to bounce here and get back up to its 50-period moving average, and I expect it to get rejected. But right now, it's bouncing off of the 200 moving average on the hourly chart, so it's right at that take profit for a day trade. If you're day trading the SPY and you got in short this morning, this would be a pretty good place to consider taking profit. It might have a little bit room down to go yet. If it touches 412.50, that would be my take profit on a day trade. But I'm swinging this one all the way through to September. This is a long downtrend for me. Honestly, what I'm really waiting for is for this head and shoulders to finish playing out. So at some point this week, I will probably take profit on my short-term expiring puts for August. Do I still have those? I don't know. I swing my portfolio. I just day trade with a paper trading account for the fun of it. But yeah, based off of this movement that I'm seeing in the SPY, I actually might consider doing another paper trade here for the fun of it. Let me look at it on the 5-minute. Oh yeah, that's a bear flag. Yeah, I'm entering this trade. Yeah, that's a bear flag. All right, so for this one, we'll do a short position. And as soon as I see it break this bear pennant, I'm going to set my stop loss a little bit more conservatively and set it for the top of this pennant, because there's good resistance here. I see this good resistance, and I see the 20-period moving average moving down with it. So if I keep my stop loss up here, I'm very, very likely, unless I'm like really wrong, unless I'm very, very wrong on this trade, then I'll see this going in my favor. I'll trade this to. I'll be a little bit more conservative. We'll do a 2.5 risk to reward ratio on this and only trade it to 413. So I'm gonna wait for confirmation. I'm not going to jump into this first thing. We're going to wait for confirmation. Be responsible. Oh, did Revlon just get smacked? It did get smacked. Maybe I would. Maybe I should have left that. Maybe I should have left that order sitting out there. They're trying to hit this thing with a kill candle. Nah, they're not going to do it. They're not going to be able to do it. Okay, back to what I was doing. SPY is looking to break down. I'm not sweating that Revlon trade. Yeah, see, it's already going green again. Okay. Yep. The way I do this is I wait for that confirmation. I want to be very patient and wait for that confirmation. I think it's probably going to bounce off the top of this one more time. And then I'll get an entry right around here or so. So this is actually improving my risk to reward ratio by it bouncing like this, and I kind of like it. See, this is why you don't enter early. This is why you wait for your confirmation candles. This is why we be patient. Does anybody have any questions, Mr. Boulay? Anybody in the analyst team? Anyone in chat? I see curve. B Dynamic says OI on the curve is doing a slow creep up.
Curve's chart looks a little ugly, but it's going up a little.
Oh, it's bouncing right off of that channel I drew. Look at that. I drew a channel on this last week, and I was thinking to myself, this one might do it. I'm gonna leave that. Oh no, I am gonna get rid of this. I don't need that. Yeah, that's a beautiful bounce. I'll put this on the 15-minute. I think I've been going a little bit crazy with my new tablet. I say new, but I've had it for 6 years. Just haven't used it in a long time. Yeah, curve is doing a bit of a flag right now. Volume's really low. Yeah, I think curve will probably have to test the bottom of this channel first. It's probably going to have to come back here. You could get an entry here if you get a confirmation bounce and then ride it back up. But I have a feeling that curve is going to end up forming a giant pennant. Change my crayons here. I have a feeling that curve is going to end up drawing more of a pennant shape, bounce up like this. I have a feeling it's going to form this huge pennant. I can see it in my mind's eye. It's already happening. I think I like the white lines best for my crayons. Okay, APE did not hold up 1850. We'll see if it bounces at 18 again. Bed Bath & Beyond, it's back down below 975, or at 975. Poor Bobby. What are the bonds doing? Ooh. The curve is uninverting. The curve is going back up. Look at the yield curve doing this rapid U-turn. This is bad for the market. This is a signal that the market is going to be in for some pain for the next several months. For those that don't know about the yield curve, there's a saying in the market that bond traders know what the stock market hasn't figured out yet. I'm probably paraphrasing it a bit too much, but it's basically a statement that bond traders are right and stock traders don't know what they're doing. And it's been true in the market for a long time. So a lot of traders respect the bond market, and part of that was this 10-2 Treasury yield curve. The 10-2 Treasury yield curve is the yield of the 10-year Treasury divided by the 2-year Treasury. And the purpose of this curve is to determine when the value of 2-year bonds is greater than the value of 10-year bonds. Basically, when this blue line goes below zero, that is a signal of a recession incoming, and this signal has been 100% accurate in history. Every single time that this inversion has occurred, there has been a recession within 3 years. On average, the recession occurs or begins 6 to 18 months after the inversion, and it starts getting really painful, as in the stock market sells off big time after it comes out of inversion. So I've marked out several of these, the last 3 recessions that we've had, 4 if you count the one that we're currently in that the government won't tell us about. We had an inversion in 2000, and then we came out of it in 2001, right before we entered into the dot-com crash recession. We had an inversion back in 2006. There was a long wait because the market was propped up by fraud and stupidity, but we had a big recession in the housing market that occurred in 2007, and it finally hit the market in 2008. Right around September was when the crash actually occurred. And then we had an inversion, a very small one that occurred right before the COVID pandemic. And again, within 18 months. It actually happened within 4 months from the time of the inversion. 6 months. 6 months. The inversion happened in August, and we technically entered recession as soon as the flash crash happened in March. So this yield curve has been extremely accurate at predicting recessions. It's very worth paying attention to. But the point that I'm getting at is that now that the yields are starting to come out of inversion, that signals a market sell-off, which we haven't quite hit the sell-off point yet, but we're kind of starting to. Down 2% on almost all of these major mega cap stocks. That I'd call that pretty bearish. Nasdaq is actually getting hurt pretty badly as well. Yeah, Nasdaq's down below 13,000. Let's go back to the AMC APE tickers. Oh, curve is bouncing a little bit stronger. Maybe I'm wrong. Maybe it's going to bounce right here. It wants to break this. It wants to break this level of resistance. We'll see if it finishes this ascending triangle. That would be a really strong reversal, but if it hits resistance here, then I would actually consider, just as a paper trade, not for real, because I'm bullish on this. I don't want to bet against myself. But if it gets rejected off of this 50-period moving average on the 15-minute plus this flat top on the ascending wedge or ascending triangle, excuse me, I would expect it to sell back down to around $6. It's a really, 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 really tiny trade, but you know, sometimes it's worth doing. Depends on the size of the pattern. BBIG thoughts. Sure, I'll do some thoughts on BBIG. Oh, I didn't even tell anybody. We're going to do an interview with Eric Fimman again. Okay, the interview is back on. We have to schedule exactly when it's going to happen, so I'll let everybody know as soon as it's penciled in and carved into stone. But yeah, we will be doing an interview with Eric Fimman this week. It's going to happen this week. Let me go pull up BBIG's chart. BBIG. And what do we got? Well, I have a lot of crap on here. I'm going to need to clean this chart up. Okay, got my daily chart. I'm going to take away this regression channel. The regression channel is helpful, but it's a bit too obstructive. You know what I could do is I could just go ahead and change my defaults. I'm going to do this really quickly. Everybody gets to see me fixing all my garbage chart appearances. That's better. That's better. Okay, that's a lot easier to look at now. Okay, so BBIG is setting up some really nice support here at $1. We'll see what happens, but I'm pretty bullish on BBIG at this point. The MACD cross, it's curling a little bit, but it's still got a lot of strength to the upside, and it just found support here again. So I'm actually anticipating BBIG could be one of the next big squeeze candidates, especially if that merger with Zash Global Media goes through. That would be dope. Okay. So my thoughts on BBIG. Sorry, I was reading some chat messages really quickly. And it looks like I got a work message waiting on me here, but I'll answer your question really quickly. So BBIG, we've got a descending wedge that we actually broke out of. So this move back to the downside to retest the top of this ascending wedge is actually pretty natural. The next move after, if it gets a confirmation bounce here, then BBIG will head up here, set up some new support somewhere in this area, and then make another break for the exit on this regression channel. This regression channel follows the move from October 2021 all the way back down to where it's currently trading here. So this is a pretty reliable regression channel. I can see there's been several bounces as it has found a base of support down here at $1. And this is a historically significant support for BBIG as well. Anytime BBIG has sold off below $2 in its history, it's based around this area for a significant period of time before it finally broke out. And when it does break out, like it just launches. There's like nothing can stop BBIG. It's like it just like goes and finds the nearest hard drug that it can find and just goes ballistic. That probably would get us blacklisted by the FCC, huh, Boulay? Probably can't make drug references on the radio. All right. So you got your technicals there on BBIG. Hopefully, I'm waiting for that base of support right here and for it to break out of this. It's a little bit more of a conservative wedge because I'm respecting the wicks instead of the bodies of the candles. If you're respecting the bodies of the candles, it's more like so, and that would mean that we're like slightly entering into it, but it's so close, like it doesn't really affect it that much. But in any case, there's my wedge. This demand zone that happened right here back in the first week of August. This was my big buy zone. But then BBIG got suspended, and I was sad. Hey, Boomer Assassin, thank you for becoming a YouTube member. I'm trying to work on consolidating the memberships so that people who are members of the Discord are automatically also members of YouTube. but I haven't quite figured out a way to make that work. They don't like to play well together. But thank you for becoming a member. It's really appreciated. And hey, you get to have some really cool emojis, and I'll work on adding like GIFs and fun things so that people can spam my channel with all sorts of fun and hilarious memes. Because spam always makes things fun. Cut to a picture of a spam in a lockbox container. Because, as it turns out, inflation's a thing. Somebody should have told Jay Powell a few months ago. Okay. I'm going to go ahead and I'm going to respond to some work-related things. I'm going to go ahead and mute myself, and I'm going to leave you guys in the capable hands of our resident disc jockey, Mr. Boulay, and I will be back shortly.
Boulay. Tell me why I have been talking and Discord has me on mute and I am not even on mute. Wow. Oh, Discord. I don't know what I'm going to do with you sometimes.
Man, we ain't heard a word.
And then I feel like, I mean, I don't know. I've been talking to myself, so it kind of makes me feel even more weird.
Yeah, I just started hearing you.
Yeah, so what happens, I don't know why, for some weird reason, what I have to do is leave voice chat and then come back in voice chat in order for my mic to be working. But I feel bad now because I heard TD talking earlier about you probably can't play that, huh, Mr. Boulay? And I was like, nah, I don't think that probably, I don't think that'll be a good idea. And I'm thinking about it like he didn't hear none of that.
Yeah, that kind of sucks, but hey, stuff happens.
Yeah. To Discord. So it looks like GM's trying to creep back. Let me see what we got. Catch up on these. Ooh, 8. Just turn red. I just hot on that. I think it's all Fugazi. Easy. I'm looking at this sticker bark. B as in boy. ARK. My medicine. Where's everybody at? Y'all shy because we're on YouTube or what?
Hey, Mr. Boulay, did you see that info I sent you in text chat?
Let me get in there. I gotta catch up. Let me see. Oh, about the professors.
Yeah, how they did a study and placed so many trades in reference to an algorithm and got different prices what for the buys and sells depending on the different exchanges, and they said it wasn't coincidence and how much it cost.
Wow. I'm gonna do a whole like documentary on all this. We should do that. We should make a movie about this.
Yeah, this is like a revolution with retail trading to me. I mean, I've never seen anything like this. I don't think there's ever been anything like this.
I want movie, I want radio, podcast, I want all of that. I need to hear us. Especially Hell's Trading Floor.
Well, there's Apes Together Strong guys making the documentary.
Oh yeah, I forgot about that.
Yeah, but that's been talked about for a long time. I haven't seen anything. We just need to do like a Blair Witch Project type thing and just low budget and just go at it.
Shouldn't they be done with that by now?
For
Hey,
real.
they might be bringing back film tax credits to Michigan. Keep that in mind, just in case.
Casual full hype squad alert. Hey. General disarray. Can you send a cactus to Merrill Lynch? The cactus. If anybody in YouTube goes to the search bar, types in True Demon Cactus Remix, you'll hear a True Demon song. As a matter of fact, I think we could play it here. Yeah, we could play it here because we made that.
Probably get demonetized, but
For our song, we made that though. Well, who was that? Was it?
I remember because of the swearing, but I'm not sure.
Oh yeah,
might have already sworn already.
Right.
I don't know.
Man, you got me.
I don't think we have.
I mean,
I've not heard any swearing yet.
TD dropped one earlier, so I think we're already. Oh yeah.
Have to make an on-air version, huh?
Yeah, I've been hearing about that documentary of Matt Soper. I haven't seen anything yet, but maybe we could just like come with a quick one.
It depends how much we care about the ad revenue, I guess. I don't know how much it is. I don't think it's much. But that's probably because we keep getting demonetized.
Boomer Assassin joined Discord about a month ago. Nothing's bouncing? I don't know, Rev. Rev looks dangerous. GameStop is just consolidating. You know what I call that? Pressure. Pressure on GM, pressure on GameStop.
And we know what pressure does.
Pressure bust pipes.
There it is.
Any thoughts on Tide? Ooh, we have. I don't know. Logical hasn't came in today. Logical is mainly the one that I know about that.
I believe he's in chat. Text chat.
I mean, who else? J-Ruff? I haven't heard J-Ruff. I don't know. Somebody has a better. I don't really follow Tide. I know they have a whole PI team that does all that in the Discord. Okay, no sweat, G. It's all good, brother. It's all good, brother. Hope it gets better. I'll fire this up for you.
Now that
Sure,
So the
yeah.
vibe's still YouTube. Well, lunchtime is about to be over. Party City looks like it's getting some more volume. Puke, man, I wanted to get in Party City, but we will got my money trapped, man. I didn't think they were gonna do that to me, or else I wouldn't have got out the BBIG position. But I like Party City. On the daily, it looks like it's been running up, but then again, it's just filling a gap fill. Is it a gap fill? Yeah, it's a gap fill all the way up to like 290. Party City. Oh, that's why it's probably moving like that. It wants that gap. P as in Paul, R as in Robert, T as in Tom, Y, Party City. See how that goes. 8 getting smacked. Tap 6, 52. Sell signal on the 3-minute for AMC. SPY probably gonna take a hit right now. Just go to 400 already.
I see Ford is laying off 3,000 workers in order to help its EV industry flourish.
I saw that. I just didn't get how that's gonna. I don't know. If you're trying to make the better EV, you're just gonna fire people. How are they gonna make the EV stuff? I guess robots. In the Discord, got any tickers that y'all looking at? What are y'all playing besides watching this AMC and 8 movement? I know a bunch of people in the Discord have puts on the SPY, puts on Apple, they have puts on Carnival. I saw Tesla, the inverse Tesla, which is TSLQ. I saw that one. What else? Elevate. Josh playing Weber. Check out Weber. I like Weber. I want to say Weber was even a squeeze play. Yeah, I like Weber. I like it on the daily. RSI still kind of looks hot on the daily. Go to the hour. On the hour, it looks like the MACD wants to flip to the buy side. Yeah, I like Weber. I have Weber in my channel. Bobski, PSTV, Therapeutics. Had a buy signal that popped up on the 18th. Oh, this thing's been running. Stock RSI looks high. MACD's wide open on the buy side. It's got a small gap fill coming down there to 59 cents. Down to like 57. That was alright. GCT. Oh, that sounds familiar. I remember this one. This one just IPO'd or something. Yeah. I don't know what this company. I mean, from the name of it, kind of know what it does, but I don't know. Damn, these alerts are loud. Bye. Revlon. Beth Bath & Beyond. What you doing?
I don't know what Bed Bath & Beyond is doing. What are we gonna play Tesla? Should we? What are we doing? Calls on Tesla?
I don't know. This one's Tesla announced a 3-for-1 forward stock split in its share of common stock effective market open Thursday, August 25th. Is there a link for that? Yeah, Tesla puts for sure. That's why I was talking about TSLQ. That's the inverse Tesla one. That one's gonna be moving. You can get calls on that or puts on Tesla. I'm being greedy. I want some more. Oh, logical playing puts on the SPY. Yeah.
Hey, so all we can do is close positions on AMC calls. We can't take a new AMC position.
What brokerage are you using? I was able to open some.
I just talked to TD Ameritrade, and they said that if I want to open a position in AMC options, I have to call them for them to put the order for me. I will not be able to do it through the app.
Yeah.
So just an FYI, if anybody's on
options, yeah. Ooh, I can't get them. Robin doesn't let me do it.
Did they give a reason for that?
They said because they have not received the new options yet. So all they have right now is AMC 1. The new AMC options have not been distributed yet. So they're expecting at the close of market today them to receive them. So you should see the new options chain probably tomorrow morning.
Thanks a lot for that info.
Yeah, no problem.
Appreciate it, Rizla.
Yeah, no, I was wondering because I was wondering what what was wrong with my options because I've been noticing that my AMC options no longer show what the current price is or the percentage of I'm either losing or gaining. All I'm seeing is the total value of the option. So I called to find out, and they're like, "Oh yeah, because the AMC 1 options no longer exist. Those are only close only positions now."
Wow. Wow. Hey, I got an alert on on E as in Edward, N as in Nancy, G as in girl. This came off of one of the lists. It's called In Global Corp. ScourgeBot picked this one up. So I'm just watching it. It hasn't really had volume, but if you look at the last 5 minute candle, that's volume right there. I don't know where that came from. Somebody knew something. I'm just watching it. I don't have a position.
They had news 4 days ago.
I seen it on the FINRA scan from the ScourgeBot. I didn't really do any DD on it. I'll just put alerts on them. That way I can watch them, just so I can test the theory and see if it actually works. So far, it does.
They were designated as one of 3 prime contractors for the Army Corps of Engineers. I think it was a $20 million contract. Let me check the number again.
Hey guys.
Hi. Hey, hold on. We're live.
Yeah, $20 million 5-year contract.
Oh, we're live.
Yeah, we're live on YouTube.
Hey.
Control yourself.
Yeah, I guess we have to
You know that's not possible, guys. I just thought I'd come in and tell Boulay about the Tesla 3-for-1 stock split because I know he's ready to go.
Somebody just posted that in the Discord right now.
I posted it.
Oh, it was you? Yeah, Domino. I'm definitely. I want to see how that goes. I'm curious as hell, man. Like, I don't know who else is gonna buy puts or calls on TSOQ, but
Better play it cheaper now.
Because you got to still remember, no, Skelly. I don't know if you can hear me, but we saw some Tesla 1750s and 2000s pop up on the open interest. I'm not sure if they already sold them once we had that run up, or if they're still there, thinking it's gonna run up. We don't know, man. I'm gonna be straight up. We just don't know.
Yeah, that's the sentiment today on the market is you just don't know what's going to happen today.
Yeah, I mean, it's definitely building up some suspense everywhere. I mean, you got APE, Tesla, you got Apple, AMC, GME, Bed Bath & Beyond. There's just so much. I think they're doing on purpose just to try to slip one by. Just try to get a fast one.
They can't juggle forever, Boulay.
Oh, man. I know. They're going to drop the ball. You can't buy AMC options on Fidelity either. The Mad Soper. Yeah, that's crazy. I'm going to go back to my chart where I have SPY, IWM, and VIX. I call it triple trouble. Oh my gosh. VIX gapped up nasty. Yeah, let's go back to the daily on these. I want to check this out. SPY's got plenty of dump left. MACD on the daily is barely switching to the buy side. SPY's getting slapped. Same for IWM. MACD barely going to the sell side. Hombre, vato. Look at the VIX. MACD switch to the buy side. Volume. This daily looks dangerous. We're going to be in for a ride. If they can get smacked that I don't even want to say it. At 31, we might be all right, but if it goes to 31 and breaks 31, we're done. I'm gonna have to figure out these positions, man. I'm gonna have to reorganize my portfolio because this gonna get crazy, my friend.
Did you guys get to hear Trey's video? Trey just put out a video, like, I don't know, like an hour ago about APE.
I didn't catch it. Give us some details on it.
Basically, what Trey said was, this is functioning as a split, and this is more of a capital thing than to prove if there's synthetic shares. And I guess I agree with him for the most part. I mean, that makes sense. Adam Aaron needs to raise capital. He does a split, but I think Trey didn't really touch on the fact that the APE being only exclusive to AMC shareholders out the get go, and it being at 100% utilization would kind of even prove that there are some shorts in the stock. But he's saying that doesn't really matter because even though there are shorts in there, it's not going to change them being short on the stock. Is basically his whole viewpoint on it.
And then you seen some article over there that said the reason that AMC was dropping was because there was a major company that was filing for bankruptcy.
Yeah, I saw that, but today was the first time I seen a reference in regard to that bankruptcy where they referenced that the company also has legal issues because they tried to do a takeover of some theaters in Canada, I guess, and backed out of the deal. But I wasn't seeing that as part of the headlines initially. They were kind of making it seem in a different way.
Well, we're not talking about AMC. We're talking about Cinemark, right?
Yeah.
Yeah, but that's what I'm saying. I mean, they try to use whatever they can to drop the price down on AMC to short. I mean, the shorts are at it, man. I mean, it's a fight.
Yeah.
You just gotta have conviction, and that's just I don't see AMC going bankrupt, bro. I don't even if they're even gonna be the only major movie company out there. I don't see them as a $10 stock. You know.
No, and I think last year you could have made that argument pretty heavy that AMC could go bankrupt, but now too much has happened with the company, with the shareholders, and everybody involved now that the short thesis is almost over. I think they're just really either dug in to the point where they need it to go down, but I think fundamentally AMC is a company that's going to be around for quite some time.
Yep, and like you said, the Ortex, it's still 100% utilization. The shorts, there's still high short interest. And I had asked TD to address it earlier. I don't know if you heard it, but he basically said that these preferred shares can't just be directly turned into AMC shares and used for covering, that there has to be a vote. And the people that hold AMC and APE shares have to approve that vote in order for that to happen.
Yeah, I increased my position today on APE. I actually bought more APE when it hit 7, when it hit 8. I increased my position a bit because I want to make sure it stays at 100% utilization.
Cool.
Let them bleed, right? Let the shorts bleed out. The cost to borrow will keep going up. Shares are going to be super hard to find. APE should be hard to find. Really, there shouldn't be too many APE shares out there, but people sell.
Yeah, I haven't sold any of mine.
32 million volume already.
Yeah, I've been watching the volume on that. Last time I checked, it was 25. So, I mean, it's trading decent. What AMC trades about 30 to 60 million on an average day.
AMC's traded over 104 million today.
Right.
Oh man. Maybe people decided to get out today and we're just holding until Monday.
In this video,
Our power just went out. That's awful. Hopefully, I don't miss anything good. They're gonna have to keep me posted. I knew it was raining, but dang, I didn't know it was raining that bad. Give me my power back.
It'll come
You
back
got
to
a
power
generator?
hour.
I do, but I'm gonna give them a minute. I don't want to get out there in all this rain. I'm gonna just give it a second.
It'll be back in power hour, Boulay.
Yeah, it'll be back on. I don't think it's gonna be out for long.
I was totally trying to make it funny.
I gotta mail some letters, guys, so I'll see you later. But I just wanted to hop on and tell everybody about Tesla and show my love in the live stream.
Hey, thanks a lot for the info about the other stream, too, that you found out. Have a good one.
All right, man.
Oh,
Take
no
care.
worries, guys. No worries. You have a nice one now.
You got it, buddy. Be safe on the roads.
I will take profits now. Take profits.
Thanks,
I
Altair.
like
Much
it.
appreciated. Hey guys, I'm back.
Yeah, take profits, True Demon.
Welcome.
Yeah, not financial advice.
That's all the financial advice. Aw, dang. Revlon hit my stop loss. They hunted us. I guess I should have set it a little bit tighter.
I actually had a question about Revlon, or actually more of an observation, because it appears that the range that it's going to be trading today is between $9.40 and $9.10, or $9 even.
And to me,
Oh, go ahead.
I was just going to say I was watching it on the 5, and it looks like it's getting support on the 50 moving average.
Very interesting.
Yeah, because it got real juicy 3 times today, where it popped at the 950, 960, then nearly 10, but got shot back down into that little sideways channel or range.
What was that price range you said again?
I'm thinking it's about $9.40 and $9.10.
That's a good call out. Thank you very much.
And it's played the same way on the downside too, where it did poke down below 9.10, getting to around $9, but then eventually crept back up, or actually, better way, it shot back up there too.
Interesting. All right. Well, I am going to go back in on this trade. I'm going to double down on this one. and see what happens. Because I probably just set my stop loss a little bit too tight. I was a bit too aggressive, but I still think that this is a good one. So we'll go ahead and reset that trade.
What was your other stop loss price?
My previous stop loss price was right at 918. It was just below the VWAP line, and they did a hunt right below VWAP, so they smashed it pretty bad. I've got this one set at $9.03. I should have probably set it lower, but I'm trying to hit a 3-to-1 risk reward ratio. Okay, let's go ahead and review all of our other positions. So we got AMC and APE still basing and trying to find some additional support below $18. Man, they are aggressively attacking APE right now. They're trying to hammer this thing down as fast as they can. BBBY is printing a meteor candle. That would be a bearish hammer. This one looks pretty rough. Looks like BBBY might have to retrace and find some additional support down at around $8. Right now, the SPY and the IWM are still going sideways on their 10-minute chart. This consolidation right here tells me that the market is moving down together. If I just go ahead and put SPY on this chart in the background, we can see that SPY is going down pretty badly. This might help visualize the IWM over SPY. You can actually see that both the charts are moving down together, and that's why there's this consolidation here in the IWM and SPY. So small caps and the SPY are moving down together. The charts are pretty much identical. So SPY selling off is not helping the market right now. It's probably the one thing that's hammering on Revlon the most at the moment. Did I really just get my stop loss hit again? All right. Well, I guess I'm done trading Revlon for today. Wow. They're just targeting everybody's stop losses today. Wow. 500 on a paper trade.
Tempestuous Persephone put in chat that the VIX is still going.
Wow. I blame Goldman Sachs. Fuck you, Goldman Sachs. That's all I have to say about that. Demonetized. Wow. Yeah. No kidding. The VIX is ripping. So this is a breakout on the VIX. Wow. That's kind of scary. So if the market calms down a little bit, then I was expecting the VIX to go up, but I was not expecting the market to just tank first thing in the morning. All of my puts are very happy with that, but still wasn't expecting it to happen so quickly. This market sell-off was predictable though. So the next natural move for the VIX to do is first it's likely to find some resistance here somewhere in this range. Oh God, my drawings are doing really terrible right now. I expect VIX to hit its head off of 24.5 at the most. Like if it hits 24.50, then that's pretty much the max for the VIX at the moment. And at that point, I expect the market to start to calm down, so the VIX will probably go sideways and maybe even head back down for a little while. On that retracement, I'm targeting for the VIX to drop below $22, and then I will look for an entry in this zone to enter into some VIX calls going out till the end of September. That's how I'm trading the VIX right now. Currently not in a VIX position, but waiting for the market to find its support and for the VIX to calm down. At which point I will exit my short-term SPY puts and the short-term puts that I have for all of the mega cap stocks that I have on the SPY. And then after that, then I will go long on SPY and short the market again. Thoughts on Revlon? I just looked at that, but whoever the hell is in Revlon right now is just targeting stop losses right now and just beating the shit out of it. It broke out of this bull pennant and then they ripped the rug out from under it. They don't want to let this thing touch $10. Something about $10 scares the hell out of whoever is short on Revlon. They don't want to let it happen. I tried 2 paper trades on this and I got stop loss hunted instantly both times. I even put a more conservative stop loss on this second trade and gave myself a base below the wick of this red candle and the triangle, and it still hit it anyway. I'm kind of annoyed, but whatever. I will wait for Revlon to finish basing and figure out another entry. But again, that's just a paper trade, so it's not the end of the world. I'm just very annoyed because it was a good trade, and I almost hit take profit, but because TradingView screwed me over on the broker login, I got a bad entry, and I would have had a take profit if I had gotten that good entry, but because I stuck with my risk to reward ratio, I ended up getting stop lossed instead. So, yeah, bad entries are terrible. Getting a bad entry on a move like that will really ruin your day. MoviePass is making a comeback with plans from $10 to $20 to $30 a month. Excuse me? Isn't that Farnsworth's company?
That's exactly what I asked, if that was for real.
What the heck?
Oh yeah, MoviePass completely defunct, and someone basically bought the naming rights to it for a couple million.
Really?
It's weird that news comes out today.
That's interesting.
I forget who exactly bought it, but man, the way they want to do it, they're basically trying to offset the costs with really intrusive marketing strategies with the new proposed app. I'm pretty sure you can find some conferences with it, and it's really creepy. So, Demon, you might you might have a field day with those talks.
Ooh, I'm sure I will. Thanks for the heads up. Okay. Look at the hourly MACD on Revlon. This freaking kill candle pisses me off because look at the MACD. It was on a strength run, and then this candle smashed the price so badly it tilted the MACD right back in the other direction and turned it flat. Jesus. This was a bank hitting day traders. That is exactly what that candle was. How much volume was this? It's like nothing. Yeah, they doubled the volume of all the average candles here. The last, let's see. In the last 10 candles, there's been 1.5 million volume, and they did almost 150,000 volume on this one candle just to smash the price and hit stop losses. I'm so irritated. I need to stop looking at Revlon's chart because that actually made me a little bit frustrated. I need to focus on something else. God, it's everywhere. It's following me everywhere. Okay, AMC and APE still basing right now at around $17. Would be very nice if AMC and APE could find some strength here. We've got some bullish divergence on the RSI, and it's oversold, like way oversold. The MACD's pulled back a little bit, and it's bouncing off of the slow line, so that's a good sign for AMC. Let's take a look at this. This pattern, this 3-line strike pattern that's setting up here on the 10-minute could be good. That's pretty nice. You know, whatever it was about $17, AMC and APE liked a lot. Okay, IWM is starting to go flat while the SPY is continuing downwards, so there's starting to be some divergence here. There's a very subtle change, but the IWM is getting flatter while SPY is continuing to the downside. This could result in a run in IWM. Watch this 10-minute candle to close. If this green candle engulfs, then we might end up having a 3-line strike pattern here. This is a very bullish technical pattern. Almost had one here, but it didn't quite finish, and then we hit a top at resistance right here. But if we get a nice big engulfing candle here in this last minute on this candle, then we might see the IWM go for a run, and we might see AMC and APE take off.
APE is halted.
Are you serious? They halted it again?
Yeah, and APE got AMC got a good candle on the 5.
That doesn't even make sense. It hasn't even moved. It has not even moved 10%.
Isn't that MHAL where they say there's some type of exchange issue with volatility? Do you think they're running out of the stuff for the options to settle stuff behind the scenes and they have to wait to get more?
I have to wonder. Yeah, they halted this thing again, and now the IWM's gone back down. Look at that.
They're waiting for people to sell their shares.
You know what that means? Buy, baby, buy. Not financial advice.
Yeah, I have a feeling Power Hour is going to be very interesting today.
I have a feeling that I'm going to be very, very happy with my position in AMC and APE. I'm not selling shit unless it's for $10,000. Make me a few million, I'll be happy.
So you went conservative from the $1 million down to 10,000, right?
Well, yeah, I mean, I don't want to be greedy. 10,000 per share is good enough for me. I'm a modest guy. I can live comfortably off of off of a few million.
Exactly.
I don't need to go for the lottery. I'm an investor.
I consider a lottery like one share of these crazy IPOs from China and maybe hit the lottery that way.
That actually was pretty silly. The HKD saga it just really shows how easily abused our market is. Oop, that's it. That's it. We got that 3-line strike pattern. That green candle, that's confirmation right there. It's very subtle, but it's there. That's a 3-line strike engulfing green candle. That's it. IWM is going to run. Let's see it. Let's watch it happen. Keep a close eye on the blue line on this chart and see IWM take off while SPY lags behind.
The VIX looks strong. Like
The VIX,
somebody's sandbagging.
the VIX is scary right now.
For real. Look at it on the 5. It gapped up and then it just got streaked. Like, I mean, this that's insane. That's scary.
SPY's getting a little bit of a bounce here. Ooh, wow. Oh, I missed my entry because I was away at my desk. The breakdown happened here. Let's see. When would I have gotten my entry? Let's see. This would have been my entry if I had been paying attention. Yeah, I would have had to adjust my take profit to this level. That's still good though. I might have even taken half of it off the table here because this is actually really good. But I missed this trade. The move has already happened, so don't trade this if you're trying to track my trading method. This is not the time to enter. SPY's bouncing right now. If it gets rejected, let's see if it rejects at 1450. This is a nice light area of resistance.
APE unhalted.
Let's see. 414.35. If it gets back up to here and rejects, then SPY's coming back down. I will tell you this. If you're new to trading and you don't know what you're doing, learn to trade the SPY. Start by paper trading and learn to paper trade on the SPY. If you can do this on the SPY, then you can trade in the market doing nothing else. There are people that only trade, they pick one thing. They pick one index, they pick one sector, and all you have to do is just know that sector. And if you can day trade on just one sector, one ETF that's just volatile enough for you to move a few points every single day and consistently hit those wins 3 times out of 4, then you can be a very successful day trader. Some of the most successful day traders are ones that just pick that one thing that they know perfectly in and out, and they have like no doubts about their trading strategy. Their confidence is maxed out, and they have just a consistent 60-70% win ratio. And as long as you're doing that and you're pulling a 2-to-1 risk to reward, then you can grow a small account so quickly. Even just getting a 1% return every single day on your account, it doesn't sound like much, but making that 1% return on your total portfolio every single day, after a year, you can turn a $100 account into $100,000 just consistently trading that return, being able to consistently build that momentum. And the bigger your account gets, the faster it grows. Yeah, here comes the SPY bounce. So stay out of its way for right now and see how it reacts to 414. And if the SPY rejects there, then you can ride it back on the way down. If I do end up seeing that, I might actually take that paper trade. We'll see how that goes. And I'll set my stop here at the bottom of this green. Well, actually, I'll start at the body of the candle. And that'll be my 2-to-1 risk for the day. SPY might not even get there, honestly, but I want to see if it forms this, if it forms another bear flag. Okay, DRV running today. I actually have some DRV. Yes, it is. Oh, yes, it is. It's running on the 5-minute. What does the 15 look like? Oh, yeah. Ooh. Golden cross on the 15-minute. Thank you for that, Boule. I needed that. I needed that subtle moan right in my ear. Oh, yeah. DRV is really strong. Look at it bouncing 3 times off of the MACD. 1, 2, 3 bounces off the MACD. Wow. Yeah, forget about this Gartley pattern. It's not happening. DRV is going for the moon. DRV breaking out on a bull flag. Actually, ooh, I actually want to trade this swing. This is a good swing right here. So what I'm looking at here is this one test candle right here off of this big move to the upside, and it immediately retook in less than 2 hours. This is a good trade right here. I actually want to trade this to the 200 moving average on the hourly chart. So I'm going to take this to 41.75, and I'm going to set my stop loss to the bottom of this candle, and no waiting. I'm just going to go ahead and set it up, and I'm going to do a 100 risk on this. So that's 1.4% of my day trading portfolio. So my risk is $100. If I win on my trade, then I'll bank $218. So I'm already in that trade. I just basically took a market order. And this is a paper trade, so just be aware of that. The reason why I took this trade so quickly is because I saw a bull pennant on that 1-hour chart. It was really small, but I knew it was there. Just by looking at the chart, you can see it here on this flag. And if you draw it right there, you can see that we formed that bullish pennant and then it broke out super, super quick. Ideally, you would have entered at 39, 37, and you would have been able to up your risk to reward ratio. An entry there actually would have gotten you a pretty nice risk to reward ratio. That would have been like, yeah, that's almost a 5-to-1 risk reward ratio. Just trading this swing to the 200 moving average on the hourly chart. I like to trade the hourly chart for swing trades because it's very consistent. And as long as you get a good entry and you place your stop loss conservatively below those big patterns, those big bullish patterns, you'll win 3 out of every 5 trades. I've found that strategy works for me pretty well. I started this account with $1,000 on my paper trading account. I've slowly grown it to it was at 7,500 today, but Revlon killed me. But that's not a big deal. I'll end up getting that back. Between the SPY trade, if I can get an entry on that SPY trade, and this DRV trade, I'm confident that I'll win those back. I'm just starting with a smaller one to respect my risk to reward ratio. I never risk more than 1% of my portfolio on a swing like this. Never risk more than 1% of your portfolio if you're doing a 2-to-1 risk to reward. Ideally, I like to go for 3 to 4 risk to rewards. Those, just trading those really good setups makes it so that you only have to win 1 out of every 4 trades just to break even. And as long as you're breaking even and not losing and getting better, getting more consistent, you can end up with huge wins, and you can trade with some really good consistency. Yeah, so like I said, on this one trade, my risk is I got a better entry with slight price improvements, so my risk is actually less than $90, and my reward will be $227 if I hit my take profit. Hey, Evan. I did talk about Rev already. I was doing some paper trades on it, and it murdered me with these stop loss hunts. It looks like now it's finally found its fucking support. God damn it. Freaking Revlon. Oh, hey, we have APE at $6.66. That sounds like an opportunity. Let's go see what APE is trading at. Let's bring ourselves down to the 5 minute. Okay. All right. Already I see two really bullish patterns. I see a 3-line strike right here with this big green engulfing candle, and I see a double bottom here on a 15-minute chart. So, or a 10-minute chart. On this chart, this is a engulfing green candle. This is a easy trade, so I will go ahead and take this up to VWAP. So I will take this up to the VWAP. So I'll set my take profit just below the VWAP line, and I will adjust my stop loss right below the bodies of these candles. That's not actually that good of a setup. I thought that was going to be a 2-to-1. I might get slight price improvement, but it still won't be enough. I want to play APE, but this isn't the right setup. It's not quite the right setup. The risk to reward is just not in our favor. Which kind of bums me out because it would have been fun to trade, even if it's just a paper account. Which, by the way, for anybody who's an APE that's looking at me like day trading and swing trading AMC and APE and getting mad at me, relax. This is a paper account for the sake of teaching people how to trade. I could feel the eyes of all the apes just glaring at me from the universe. I really like this trade, though. I really do like it. Fuck it. We're going to risk it for the biscuit. We'll do a 100 risk to reward ratio, $100 risk on a 3-to-1 risk to reward ratio, and we will take that entry. Got slight price improvement. $91.16 is the risk. The take profit is at 8.666. Yes, I did choose that intentionally. All right. Let's see how Apple's doing. Let's catch up on the Apple trade. Oof, yes. Apple just got rejected on its dead cat bounce. It's coming back down. Oh, yes, that tickles me so good. Let's see. This hourly. Ooh, wow. Apple. We're going to do a day trade on Apple, too. Well, this is going to be a swing trade.
Tickers be so what?
Tickers be so good. I don't know what you heard.
Oh, I heard tickle.
Oh, tickles me. Yes. Yes. Seeing Apple collapse like this does absolutely tickle me. All right, I'm going to place my stop loss above the wick because I really don't want to get hunted again on this swing. It's very frustrating because I know these are good trades. This is a nice risk to reward setup. This one I'm feeling a little bit more confident on because I think that Apple needs to come down pretty hard. I might end up waiting a few days for this trade to play out, but I really like it. In this particular trade, I'm betting that the momentum will carry Apple all the way back down to its 200 moving average on the 30-minute chart, which is a bit more conservative. This bear flag, which I'm not actually waiting for it to finish because it's been consolidating sideways. I'm expecting Apple to get carried down by the VIX and for fear to start running rampant on the market. The tech sector is getting hammered right now, and the semiconductor sensitive stocks like Apple, Microsoft, Nvidia, they're all red. They're like big time red. So I want to play that fear. And right now, as you can see, Apple's actually sold off the least of any of these tickers right now. So it's still got room to fall. And that's why I'm playing this. I wouldn't necessarily recommend if you're, and I can't recommend anything because I'm not a financial advisor. So remember, this isn't financial advice. But if you're trying to do this kind of a day trade, I wouldn't actually set this stop loss so tight if this was with real money. I would probably place my stop loss above the gap. And if I saw that it was starting to reverse on me, I would exit the trade earlier than this in order to protect some profits. But I have a feeling that Apple's got a long way to fall this week. So I'm setting a tight stop loss, and I'm betting that we're below the supply zone here. There's a big supply zone right in this area, and I'm using the volume shelf to tell me that. So I'm basically just placing my risk somewhere in the middle of the supply zone above it. So once we get below this $167 level, I'll scale in a little bit more into this trade. And if we start coming back up immediately, like it's going to have to happen really fast, then I'll know that I'm wrong and my trade will exit and the stop loss will get hit. But I'm feeling very confident in this one. It's already starting to go in my favor. And just on this one bet for $245 risk, I am taking a 5-to-1 risk to reward ratio, roughly. That gives me a take profit of just under $1,400. So this one's a bit of a more hairy bet. I have a really tight stop loss, but this is what I like to do because this gives me the best chance to. My take profit here is so high on this trade because the setup is so good, and with the history that I have with this strategy, I'll win at least one out of every 3 trades, and this trade in particular will give me a very nice return. So I'm kind of ignoring my risk tolerance a little bit. Not something I recommend doing with real money, but this is a paper account and I'm trying to grow it quickly. And for me, this is for fun. So, and also just to teach people. The important thing to pay attention to when I'm doing these trades is pay attention to the risk to reward, pay attention to the patterns and the setups, and pay attention to where the take profits are for based on technicals. So my take profit is a little bit ambitious for a day trade, but for a swing trade, it's pretty good because this 200 moving average is chasing this, and I have a feeling the price is going to magnetize itself towards that 200 moving average. Okay. Hey, the other Barry, thanks for posting this. It was a summary video of MoviePass 2.0 and the keynote. Thank you very much. Mr. Boulay, would you be so kind? Or is Boulay still having internet issues? I think he is. I'll go ahead and post this in chat.
He was having power issues.
Power issues. My bad.
I'm here. What's good?
Oh, I was just wondering if you wouldn't mind posting that link that the other Barry added in the trading floor text chat to the YouTube chat so people can catch what we're discussing.
It's a few months old, but MoviePass is just a never-ending cavalcade of venture capital comedy.
That's sounds like an accurate assessment there. Did my ape trade execute? My ape trade executed. I don't think I even meant to do that.
Speaking of capital comedy, Revlon just got slammed down to $8.59.
Oh my god. Fuck you, Goldman.
They're not done either. But
did anybody else see that green? Did anybody else see 2 green candles painting here and then suddenly it just went red on me? I need an instant replay of that because I swear I saw 2 more green candles on this chart and then suddenly they both turned red.
We need to start trading in the dark. They're watching us.
They are watching us.
Dip before the rim.
Pretty impressive too. A few minutes ago, bounced down to 890, jumped up back to 910, played around in that range, then just stabbed all the way down to 860.
It was a pretty brutal stabbing too.
Yeah, that was violent.
It was violent. Feeling a bit attacked. Okay. So Apple is stalling out here just a little bit on its 200 period 50-minute moving average. I'm expecting this to bounce one more time, just one more time. And then if I do get that bounce, then I'm going to enter into I'm going to add to my trade. We're just going to watch Apple plummet. Like I said today, Apple taking the escalator up and falling down an empty elevator shaft on the way down. Look at the RSI. The RSI is just this big red channel to the downside and like 4 bearish divergences. Tell me that Apple is not overbought. Somebody please somebody who is bullish on Apple, please try to convince me. What is the argument for why Apple is just going to keep going up? I have to hear what the other side of the thesis is because I don't see it. And if somebody is bullish on Apple, I really do legitimately want to know why, and I won't make fun. I'm just looking at the way that Apple has been moving and thinking to myself like, oh my god, it looks really overbought right now.
What was that? $8?
Revlon down to 8. Oh my god, Goldman, leave us the fuck alone, would you?
Shit, VIX is still moving too.
Jesus. Is there even any news? There's no news. So Revlon's just plummeting for no reason at all. Dude. Goldman Sachs is fucking with it. That's what's going on with Revlon.
I think it just got halted.
Wow.
No, it didn't.
Yeah, I think you're right.
It is. It's halted.
756, 10.95% down.
Hey, Boule, we can't have the music in the background, otherwise we're going to get copyright strike.
Could y'all really hear that?
Yeah, I was able to hear that. It's okay if it's just for a few seconds, but we can't let it roll for too long. If it's longer than 10 seconds, we'll get claimed.
Wow, I literally had my speaker way back there. I didn't think it was going to come out.
Yeah, I'm sorry.
Shout out to the Yeti mic.
The Yeti mic is a monster.
For real.
Actually, got a headline for Revlon. Bank Revlon says no official equity committee is needed in Chapter 11.
Wow. The market... Jesus. All right, let's go read this. What the fuck is going on now?
You know what? To be honest with you, I think this is part of not their plan, but this is supposed to be part of our plan. This is sometimes what happens if you're looking at Rev as a potential squeeze play. This is the type of stuff that happens. You get multiple volatility halts. You get them up, you get them down. So they are trying to shake you. Don't get me. This is if you have major positions in it. That's where you got to start thinking about a plan because these things can get violent up or down. And I'm talking about expensive contracts, buying them whenever they're buying the contracts whenever they're high. If you're buying calls, I mean, you got to be careful when you're playing stocks like that.
Do you have a link to that? Do you have a link to that, Insano? The actual article? Because I can't find it. Google hasn't indexed the page yet.
Yeah.
The robot sounds very robotic, and I can't understand him. Please, Mr. Roboto Insano, please speak to me.
Yeah, I found it.
Bankruptcy beauty product supplier Revlon says there's no need for an official equity holders committee in its Chapter 11 reorganization. Revlon, in court filing Sunday, said it appears unlikely that shareholders will receive much, if anything, in its bankruptcy, and therefore an official equity committee isn't warranted. It pointed out that some creditors, typically a group ranking higher than shareholders in bankruptcies, have securities currently trading at steep discounted prices. Another sign that equity could end up with nothing. God damn it. Revlon also said that Hertz Global Holdings had no official shareholder committee in its bankruptcy, and yet it paid out roughly $1 billion in equity value. An ad hoc group of minority Revlon stockholders has said an official committee should be formed, pointing to a stock price that has risen since the June bankruptcy. Revlon said majority shareholders can represent the minority group's interests. As if the majority shareholders are the debt holders. That's stupid. The majority shareholders are the fucking debt holders.
Yeah,
That's
there's
not
a big red candle too on Revlon. It's down to 750.
Wow. What a crock of shit. That's stupid. What a bullshit narrative. The lien holders are the ones that have the equity. They got the equity in the God. The debt holders had claims on the equity, so now the debt holders are the majority shareholders. So it's not in their interest because then they won't get their money paid out for the bonds. The bonds will get paid first, so they want the shares to be worthless because they got them for free. They own the company now.
This
I'm
doesn't
sorry.
seem to be new news, though.
Yeah,
this
I
is
did.
All some old stuff.
I should have somewhat expected this, but wow. Like they're not even trying to fight for shareholders' interests at all. They're not even trying. They're just like, yeah, we'll just let the debt holders decide. When that's who they're simultaneously suing. I thought that the executive board would actually fight back a little bit because the executive board is suing their debt holders because of the bad financing deal that they sold them. So this sounds like bullshit to me.
I think it's unhalted.
Yeah, I see it's unhalted. We'll see if it finds support here at 750. Nope.
Oh my god.
Wow.
What the heck? Okay, hold on. I got a little bit of free capital here. I think I might try to find me a little lottery ticket.
All right. Don't risk too much on this because I think they're going to send it all the way back down to this liquidity pool. Wow. Revlon is not worthless like they're trying to make people believe. The IP value of their brand is worth millions and millions of dollars. They're a multi-billion-dollar brand. There's no way that this company should be trading at this level, even in bankruptcy. Whatever.
This drop is steep.
Yeah, they're destroying it. Bears
Any
are running
relief?
wild on this one.
And they released this information on a really down day, and I'm sure they do it on purpose for the dogpiling effect.
Yeah, they did it they want to do it to crush the delivery as well. So this is why the stock isn't rising due to the late settlement delivery for those options. Because they know that they knew that this news would be coming out, and they hammered the price at the same time. Now they'll be able to deliver on the calls that they were supposed to be delivering that were exercised on Friday, and they'll be able to do it for half price.
It's halted again at 637.
Wow, what a crock of shit. Well, this is the risk. This is the risk that we take on these types of bets, and this is why we do small bets on Revlon. This is why we did small bets.
Yep, I only scaled in a tiny bit on this one.
Yeah, it was worth the risk to take a shot, you know, like risk $100 or $200 or something like this, because it had the potential to just go absolutely ballistic. But the Bears are in control now, and they're gonna use this to take it down as low as they can. They'll get it to zero if they can. They'll try to take this to a penny if they can.
And you know, there were profit opportunities along the way during this trade.
Oh yeah, yeah. I know plenty of people took tons of profit on this. It was a really good trade. These big swings, these were beautiful, beautiful swings. I'm just really frustrated because this is not this is not what I expected from the executive board. It sounds like they got paid off and they're just like, okay, do what you want. It's just like, here's all of our shares. Just let us sell before you announce that you're going to murder the company. The debt holders get everything in this situation. That's what this means. So whoever sold them the bad debt and the terrible financing agreement, they get the company. They get full control of Revlon. So now the bankruptcy, the bank that called them into bankruptcy court is going to get the company. They're just going to take control of it. That's what's going to happen here. They'll hire new management. They'll take control of everything, and Revlon will become an entirely new company. So the shitty part about this is that if you're holding on to shares, you may as well just sell covered calls and buy some puts and ride it down, because it's probably not coming back from this. But the beautiful part is that once Revlon comes out of bankruptcy and they issue new equity, the company can recover very quickly from there, because what will happen is the old shares will basically go away and new equity will be issued. So it'll be like a new IPO basically. Once this happens, the stock will go through a new price discovery period, and it'll be like a brand new company. It'll be totally restructured the same way that like GM and Ford were restructured after the 2008 great financial crisis. So, and if you look at the stock price of both of those companies after the GFC crash, they went nuts. They completely ripped to the moon over the next 5 years when they during the recovery period.
When this happens, you keep the same number of shares that you had. It's not like you're going to get reduced shares or something of that nature, right? It just simply switches to a different ticker if that's what they do, and bring it out under a new name or under a new company name.
No, actually, it works more like reverse splitting. They issue entirely new equity, and you get reimbursed with your equity, but you're, as an equity holder, as in a shareholder, you get the pennies that the bankruptcy courts throw you. So whatever they decide the shares are worth at the new restructured value, that's all you get. So if you're an equity holder, a shareholder, you lose everything. So it's not worth it to hold on to the shares at this point. You're better off just dumping it and getting out and taking your profit, or taking as small of a loss as you can, and just get out. It's not financial advice. You can do what you want, but I don't think Revlon's coming back from this, even with the gamma squeeze and the late settlement delivery. It's done. Like, the bankruptcy courts have fucked the shareholders, which is not all that surprising. It's not all that surprising. I just thought that the I just really thought that the board was going to fight for this, and they did not. They straight up said no. You can all get screwed. Yeah, thank you,
Isn't it true
Tempestuous
though?
Persephone, for sharing that video from Khan Academy. Yeah, Chapter 11 bankruptcy video from Khan Academy. Check it out. It's a good video. Yeah, I would not be trading Revlon. It might get a dead cat bounce, but like if you're in it, just try to get out intact. I'm really sorry. We knew that this could happen. It really does suck. God damn it. Oh. Now I'm just gonna wait for like just the flood of angry people to just come and assault my Twitter handle.
Hey, it ain't over till it's over. That's all I gotta say.
Yeah, it's true. Like things can happen, you know, it can still surprise because there's still late settlement that needs to be accounted for. There's all of those calls that were in the money from last Friday that have to be accounted for. It's just on its face, situation doesn't look good. All right. We'll stop looking at this. It's painful enough. We won't torture people. Let's go look at AMC and APE. Okay, AMC APE looks like they are basing together. APE is still bull flagging. Just a little bull flag. Very little one. AMC is basically sideways. It's not really doing anything at all. Sideways between 1090 and 1140. So AMC's ranging. APE has all the volatility right now. MACD pullback is looking good. This consolidation for AMC and APE together looks pretty nice. It's indicating that it's going to settle into this range right here. So expect them to trade together for the rest of the day and maybe tomorrow, and we'll see what happens. We'll see what happens starting at the bell in the morning, but we'll still keep a close eye on it. BBBY still printing a dragonfly doji here at the 50 period daily moving average. So it's volatile. Like it has a really tall wick on it, but I don't know what's going to happen with Bobby. I would still stay out of the trade because the volume is heading down at the moment. This step down in the volume is telling me that it's still got a little bit of room to fall. Once we get to like pre-August the 4th levels of volume, then you can consider re-entry, because then you'll be more confident that it's found where its price is going to settle at. It's got a little bit of room left to go. Let's check out DRV. Yeah, DRV is showing some nice strength. I'm trading DRV overall over a long term back to the top of this channel. You know what? Where's my trading panel? Where's my trading panel? I'm gonna swing for the fences on that paper trade. I'm gonna trade DRV because why the hell not? I'm gonna trade for that $60 take profit. No, we'll go even further than that. This is just a paper trade before people get too excited. Oh my god, TradingView. How broken are you today? TradingView just won't work. TradingView's paper trading brokerage just won't work. It just decides when it wants to. Okay, here we go. Now I'm on DRV. Let me bring this out to the 1 hour. What was that on? It was on my naked charts, wasn't it? Yes, it was. Okay. Well, that's okay. I can still bring it up to I'll still bring it up to my take profit area up here. Okay, we're swinging for the fences on this one, ladies and gentlemen. Oh, there it is. There's my my regression channel. We'll go for 60. We'll go for 63.92. There we go. Okay, so DRV. I have adjusted this because I remembered that I was trading in a regression channel, and this is a small bet. And I am a swing trader. I just suddenly remembered that True Demon is a swing trader. And True Demon likes how bad the housing market is doing. Because right now, the government, and especially Jerome Powell, decided that we as a generation need, quote, a bit of a reset. So that means that he's going to just start throwing rocks at the housing market and hoping that it puts people into foreclosure. So I'm expecting that by November, the housing market is going to tank and the crash will be in full momentum. Just basically train going over the bridge and just flying off the cliff. You know, do we have that? Do we have that GIF handy? Just imagine a train flying off of a bridge. That's America's housing market, and that's going to be happening here in the next several months. I'm anticipating it anywhere from 6 to 18 months from now. But I think that the housing or the stock market is going to start pricing it in a lot sooner than that. So hence, I am betting on DRV for a big swing for the fences. And this is just a paper trade. I have options in DRV, but this is for the sake of trading. I showed you my paper trade for like a short term, like a 1 to 2 day swing, but I'm more bullish on DRV, basically bearish on the housing market. So I want to trade according to my much my much more. God, how do I want to describe this strategy of mine? We'll just call it aggressive. Hey guys, so for those of you coming in here and asking about Revlon, Revlon just announced that equity holders are basically getting nothing, and the bankruptcy court is going to shove a great big purple dildo up our butts. So you need to get out of Revlon. I'm sorry. This is not financial advice, but the bankruptcy courts have decided that Revlon equity holders are getting nothing, and the debt holders are going to dictate the terms. And they decided this because the shareholders, the majority shareholders, are the debt holders. The debt holders basically swept all of the equity out of the markets because of the way that they structured their bad financing agreement, and Revlon shareholders are going to get smoked. So there is still the potential that in the short term that those options settlement could send it flying, but it won't last long. And if you're holding on to shares, i.e. equity, it's not worth it. I just don't think it's worth it. It's way too risky, and the share price is likely going to come down very hard. So I'm sorry. I know it sucks. It's not fun, and it feels really, really cheap and shitty because it feels like you're being robbed, and that's because you are. And that's not up to me. That's up to the bankruptcy courts, who have basically just agreed to let the debt holders take full control of everything. And the way that bankruptcy works when it comes to these companies, the debt holders have no interest in giving equity holders anything. They get the most money when the stock is worthless. So they're doing everything they can to pound it down. So that's probably what's going to happen. The bankruptcy courts have ruled in favor that debt holders get to dictate all terms. And that means bad things for the company's stock. So it'll probably be a good trade in the future once it comes out of bankruptcy. But until Revlon emerges from bankruptcy, I would not want to be holding on to shares. You can trade options, but it's probably going down. Okay, let's go back to AMC and APE and catch up. Another red candle on the 10 minute. Still trying to find a base of support. I'm thinking that it's going to just keep on ranging. expect to see AMC and APE to stay here for the rest of the day. It's just going to stay between $17 and $18. You can try to do puts on Revlon if you want to, but the volatility is so blown out, I probably wouldn't even take them because the puts are going to be so expensive now. I wouldn't even bother. Just being honest. For me, the risk to reward on the puts would be so small. You might make a few cents on the dollar. The news hit and then immediately it started selling off. So it even started selling off before the news was announced. So somebody knew and they started trading immediately. Just like how the stock started rising before the bankruptcy courts announced that they were going to give Revlon a $1.4 billion cash injection. The stock started rising before then. Somebody's in the courtroom listening to all of this happening and they're feeding it to their hedge fucks over on Wall Street and letting them know, hey, the banks have decided to, or the bankruptcy court has decided to fuck the shareholders. Go get your puts now. And now somebody is in a huge short position already and they want big money for those puts. So to me, it's not worth it to even, it's not even worth it for me to go short on Revlon because I would be afraid of those late settlement on those calls for the price to just skyrocket. And I don't think it's worth it to buy puts because the volatility has made them too expensive. So for me, Revlon's not a trade anymore. It's just get out intact if you can and move on. And for what it's worth, I'm really sorry, guys. I know that I called out Revlon, and we had some good trades on it, but when this shit happens and it just unexpectedly rug pulls because the law decides or because the debt holders decide or bankruptcy courts decide, whatever, it still sucks because nobody can react fast enough unless they have an algorithm to do the trade for them. This sell-off happened before the news was even made public, so there's nothing anybody could do. Yeah, try to get yourself a good exit. If you can get a good exit, do what you can. Let's see. I am. Is Revlon still trading right now? Because I'm probably going to exit my position here. It really does suck. It really does.
So I probably cut my position a little too quickly. I could have waited for a better exit, but there's really nothing, no strategy or any way of knowing that it wasn't going to just continue to quickly drop. There's nothing else that I could have used, correct? That you didn't think of?
No, I don't think so. It's one of those situations where now like the whole play has just been rug pulled. You can wait for these bounces like this, but this is the definition of a dead cat bounce. So it could recover. Like I don't know for a fact, I have no idea. But at this point, just looking at the way that the price has just collapsed and the ruling made by the courts, I would just not bother trading it. Or if there's if you have some calls and some puts, just leave runners in, leave them behind, and see what happens. But for me, this one's not a trade. Hey, for those guys asking in the trading floor text, yes, we are still live on YouTube.
Yeah, sometimes when that happens, I stop looking at the stock afterwards. That way I don't have to see it and worry about regret.
Yeah. I've got I have one call in Revlon that I've just left behind, and if for whatever reason it just magnificently squeezes, then I don't know, maybe I'll get a refund. I'll get a refund and manage to pull some money out of it. It was such a small bet that it doesn't really matter if I lose it. To me, it was less than $50. It was so small, so like I'm not worried about it. Um, so if Revlon somehow magnificently recovers and takes off because of the late settlement of those in the money options from Friday, then that's all good with me. But more than likely, this is just a bear rally from short covering, i.e., a dead cat bounce. Man, that sucks. Bankruptcy plays are risky business. They're usually the best when you get in early and you catch that initial fall, and that is basically like trying to catch a falling knife. So I don't want people to think that that's a smart way to trade. It's one of those things where it's like, yeah, I'll risk $50 or $100 because I'm okay if I lose that. That won't break the bank for me. So if I lose that, whatever, shrug it off. It was a meal at an expensive restaurant that I missed out on. But if you're right, then you get back 10 meals at a very expensive restaurant, and that's worth the risk that you take.
Yeah, and there were multiple opportunities to take profit depending on your risk tolerance. So you could have taken profit a couple times already and bought back in, and still not an issue.
Oh yeah, absolutely. Like here, there's a really nice setup here and here and here. There's plenty. There's been plenty of opportunities to catch those runs. You play it in both directions. So it is what it is. It is what it is. Let's go take a look at DRV. Still got some momentum in it. That was the daily chart. Look at that. DRV just charging forth, bravely forward. AMC starting to get a kill candle here. Trying to break that 17 support. Let's see if apes hold it up. IWM is the IWM is still showing more strength than the SPY. If I could see IWM at some point in the future just at like 0.45, that would just be so amazing. If the IWM was greater than half the value of SPY, you would be literally seeing hundreds of squeezes happening in the IWM. There's so many heavily shorted tickers in the IWM Russell 2000. A sell-off in the SPY, if the IWM were somehow able to hold itself up against the SPY, would be hilarious. This is part of my thesis as well for the liquidity crisis that I kept talking about. One of my main points of my thesis for a squeeze in AMC and a few of the other tickers that we track here on Hell's Trading Floor is if the banks and the large hedge funds have a collateral crisis, which causes them to basically have less value in their portfolios and in their managed accounts than what their shorts are worth, then it will result in a margin call, and they'll be forced to close a bunch of positions at the same time, and that covering will beget covering, and we kind of even saw it when Bed Bath & Beyond was running. because when that started happening, you notice that all of the meme tickers popped, and it was all the heavily shorted ones. Even Senseonics and Biora were running, and it was kind of funny to watch. And I know that this is because all of that collateral is tied together. Because these guys on Wall Street that think they're so goddamn smart, they have these bets against all of the same tickers. They're betting opposite of literally everything that we're in. The only difference between them and us is they have clients that they have to have returns. They have to have a certain return target, and they have to protect their clients' money. So if they get into a situation where they have to choose between maintaining their pride bet to short against all of these meme tickers because apes don't know what they're doing and we're just a bunch of dumb idiots that are, funneling our money into a casino, we have cash accounts, at least for the most part. If you're a responsible trader who is, even if you're trading on margin, you should only be trading up to your cash limit and you should not be dipping into margin. And by doing that, you're keeping yourself at less risk than what these risky ass hedge funds do. These dudes over leverage themselves 3, 4, 5 times what their net worth is. And if they have a collateral crisis where if one of their assets just suddenly drops in value and they're not ready for it, you end up with forced liquidations the same way that the Voyager liquidation happened in the crypto market. If that starts happening, then you'll see things like Bill Huang and the Archegos fiasco happening all across the market. Bill Huang's liquidation, his margin call, was enough to cause Discovery to collapse. It caused the price of Discovery Inc. to just fall down off of a cliff. It's actually pretty spectacular, the collapse that it had. And it lines up with a major run in AMC. Let me see what the what was it? DISC? Yeah, DISCA. Let me see if this was it. This is the Class A stock. I think I need Disc B. Where was the Discovery?
When they merged with Warner Brothers, they changed the tickers to.
Damn it. All right, well, there was another ticker. What was the other one that they got liquidated on? Was it TMC or something? What was the other big liquidation? No, it wasn't TMC. Was it Tencent?
Was it like it wasn't Verizon. Viacom?
Viacom. That was it. That's it. It was Viacom.
Wasn't Tencent Music wrapped up in that too?
It kind of was, but it wasn't quite as spectacular. Where's the Viacom ticker? It was like Viacom, CBS. God, why am I having so much trouble finding this ticker? So, somebody in chat, help me out. I need the Viacom ticker. Man, I feel stupid that I can't remember this ticker. It was so important at the time.
I think they changed it too, because that's not the same ticker.
When I look up Viacom, nothing comes up.
It's like they just deleted it. Shares of Viacom, CBS. Even the articles don't reference a ticker anymore. What the hell happened? VIAC. The historic one was VIAC. Yeah, it's gone. What?
Try VIAB.
Still not there. Man, that's annoying.
I'm looking at it as VIAB.
Yeah, but it doesn't show up in TradingView.
Yeah, the old ticker was VIAC.
Well, thanks for trying,
Looks like
guys.
they might have merged with CBS, Viacom CBS.
Yeah, they've been merged for a while, but I think are they all under Paramount now?
Oof. All right. I haven't even looked at Tesla today. Tesla's gotten really sick. Tesla is very ill, everybody. It is not doing well. Tesla's coming down to its 100 average on the 1 hour. It's got to retest the support. You guys want an easy short trade. Yeah. 2-to-1, set stop loss at the top of this candle and trade the take profit at this level of support. Just place it right above the bottom of the body of these candles. This is a good setup right here. I'll go ahead and take this trade and track it. Oh my God. Trading view.
This isn't to drum up hope on Revlon or anything, but Hertz had Chapter 11, and it is true that they didn't have an equity committee to sort it out, but they still didn't separate into a new ticker, right? They somehow got the funding and got through it, or negotiated everything, if I'm remembering correctly.
My memory is fuzzy on Hertz, but it is possible. That could be a very similar situation. It's just not something that I would bet the farm on, you know. I don't want people to jump into this because I've been seeing a lot of people tracking my trades on Twitter, and they take such aggressive positions, and I don't want to see people hurting themselves again. It's gotten excessive, the number of times that I've seen people just like I like bet half my portfolio, or I full ported into this one ticker just because you said so. And I'm like, I did not fucking say so. I've never full ported anything in my fucking life. Nobody should ever do that. It's just dumb. It's so dumb to full port anything. It's not something you do. But I'm trying to avoid, like, I want to make sure that if people are going to stay in that trade or enter into that trade because of the volatility, that they should really, really consider being as conservative as possible in their bet, because there is a very high likelihood that no matter what direction you take, you could get rug pulled badly. It can go against you no matter what direction you pick. It can go bad. This is one of those super volatile, super risky trades where if you're trading with a stop loss, you're 90 times more likely to get your stop loss hit than your take profit, no matter what no matter what direction you choose, because it's just gotten crazy now.
True dat.
Hey, Soldier of Fortune. You can full port selling out for good blue chip companies in a legit bull market if you're lazy. All right, my APE stop loss got hit. Man, I'm just not having a good day, am I? I didn't even mean to execute that paper trade. I don't know how I ended up executing that. TradingView has been screwing up pretty badly. I'm glad my portfolio isn't in TradingView because I gotta say, the execution on it has boned me multiple times.
I don't think any of us are having a good day.
Yeah. My regular portfolio is doing great. Like, my puts are printing. Apple, Tesla, Bank of America. Everything looks great. It's all so beautifully red, which for me is green, but the meme tickers are getting pulled down by the SPY. Oh, the SQs are going up like crazy too. Are there any bears that are hanging out with us that are paying attention? Let me hear how many bears are actually having a good day today, because somebody has to be having a good day today. See, all my short bets are doing fantastic. if just one of these trades goes, if I hit my take profit on just one of these trades, I will make up all of my losses for the day and cover the cost basis of these other trades. And even though this is just a paper account that I'm trading on in front of you guys for the sake of, like, the teaching moments, this is really my attitude about trading in the real world. I try to be a lot more relaxed about it. I used to be a pretty emotional trader, especially first starting out, and because it's funny, you know, you get a little bit excited and hyperbolic here in front of a camera or the microphone, so to speak. But I want to emphasize it's really important to be it's very important to be emotionless and objective, which is impossible for any human to be just perfectly, like, totally emotionless. But you should strive to be as relaxed and emotionless and objective in your trading as possible. Trade the chart in front of you, and you will end up having more success in the market. It's more important to look at what is in front of you and just objectively look at the facts. And when you see something that's just not good, don't invest in the hopium. Don't trade hopium. It's fun to risk a little small bet. Like, that's your casino. That's where you bet. You bet on you bet $10 on double zeros, right? It's one of those situations. That should be how you trade your meme tickers. Bet $10 on double zero and spin the wheel, And every now and again, like once in a blue moon, you'll get a big hit and it'll feel great, and you walk away feeling like you had a great time. And when you lose, it just doesn't matter. And that's and when you lose that small that it doesn't matter, it makes trading so much less stressful. Trading can be fun. It can be fun and not stressful. And if you can make trading fun and not stressful, then you'll love it, and you'll be more successful for it at the same time. Okay, let's see. Yeah, IWM is really holding up where the SPY is falling on its ass. I kind of like it. Let me move these over to percentages. And I will merge to the right. Nope, that's not the way to do that. It would be nice if this was a very, very, nice modular system where I could merge the scales just by clicking and dragging them. But it just doesn't seem to want to let me. Oh well. Ooh, hey, look at that. RSI on IWM and some strength coming into it. It's crossed above its moving average now on the RSI, and we've got some nice big green candles. I bet you see some green on the squeeze bets. Seems like our cat's doing pretty good today. I know that everybody is red right now, but what you should probably be a little bit what you should take to aid your confidence a little bit is that you're not as red as all of the big guys on Wall Street right now who are very unhappy with their decision to go long on Apple and Tesla. Because right now they're getting killed. All of the big tickers on the SPY are down way more than everything that's on the IWM right now. So Wall Street is not having a good day. Straight up not having a good day. Thank you, Brian A, for letting that be said. Brian A says, you said weeks ago that Rev was an extremely risky play and it's on us if we over leverage ourselves. Thank you for recognizing. I appreciate it. Not everybody feels that way. And I would say that the majority of people that I've interacted with, especially on Hell's trading floor, is understanding that when you play these bankruptcy plays, that it's a very high risk to reward setup. So you need to be betting small. It should not be such a large amount of money that you are sweating every day thinking about what direction that ticker is going. If you are in any bet, even if it's a good bet, even if it's on like the best company in the world and it's performed like 9 times out of 10, if it's outperformed the SPY 9 times out of 10, even then you should not be sweating on your bet every day because that's stressful. And if you are a stressed trader, you will be a losing trader. Stressed traders do not win bets. Stressed traders don't make good decisions. And stressed traders stare at the VIX and the UVIXY, and they are looking at this like, oh God, please no, please don't get any bigger. Let's see. Ooh, wow. The bond yields. Let's catch up on the bond market because right now that's looking a little extra scary. Ooh. Oh, sir. The bond yields are rising fast. Hey, Don. Call out to November on DRV. Too early or should it be out further? I like November on DRV if you're playing close to the money. If you're very close to the money, then I like that. If you're going out longer on a big housing crash, then maybe consider puts on XLRE. But if you are playing DRV to like go farther than $40 before the end of November, that's a good trade. And I actually am in a very similar one myself. So respect your risk to reward. But yes, I like that a lot. You could get puts on Nail. That's another good one, actually. Yes, that's an excellent point. Thanks, Soldier of Fortune, for reminding me of that ticker. Nail is the direction daily. This is the direction daily bullish ticker on home builders and suppliers. And actually, let me go back and make this a new chart. Sorry, 1 second. So Nail basically is a 3 times leveraged long bet on home builders. Think like DR Horton, Lennar, Pult Homes, KB Homes. There's a bunch of them. But this is a leveraged ETF that is bullish on home builders. And right now, home builders are not bullish. Home builders are very very bad. Just take a look at DHI. That's DR Horton's stock, and they are hurting badly, and they are liquidating inventory so fast that it's making the housing market can't keep up. They literally have so much inventory that they're still finishing building homes and they cannot sell them fast enough. And it's causing the prices for listings to plummet. And also, the inventory on housing is rising fast. It's like a tidal wave of just new houses coming onto the market. And the housing market is already way overbuilt and overbought. So now sellers are beginning to panic while the home builders are trying to liquidate inventory, and they are trying to walk this razor thin line of getting the perfect price where they can outbid their competing sellers while also not taking a massive loss and a reaming selling the properties. And nobody wins that fight. It's like It's like trying to play chicken with a train on the railroad tracks, except your feet are in cement boots. Somebody's going to lose very badly. It's just one group is going to lose worse than others. That's kind of how I'm looking at this situation. So, yeah, if you are bearish on the housing market and you're especially bearish on the home builders, you could buy puts on this, and it would probably do very well. As a matter of fact, now that I think about it, like selling covered calls on nail could also be a good strategy, like selling credit spreads on nail. Because this is a leveraged ETF, there's quite a bit of drift in this, and traditionally they do well, but this hasn't been around for a long time, and we haven't actually experienced a major housing crash while these ETFs like DRV and nail have been in place. The closest that we had was the COVID crash. The COVID crash was the first time, and look at what that did. The COVID crash crushed this thing. And it took a long time for it to recover, too. Down 93%. Oh my god. Oh, that hurts so bad. Oh my goodness. Wow. That's worse than the 1929 crash. Well, it's actually pretty comparable. But yeah, nail from the top, from the peak pre-pandemic, crashed 92%. 92, 93%. That's crazy. Oh my goodness. Wow, going short on nail could actually be better than TRV. I'm kind of wondering. Wow. I mean, granted, it fell from $90 and the COVID crash was spectacular. If you had gone short on nail just for the just since January when the Fed started when they announced tapering and saying that they were going to start tightening, that would have given you that's 95% downside. So yeah, nail can move. When the home builders are not happy, they're really not happy. Dubiwa, I prefer to smoke opium. Oh man, that's amazing. Oh wow, that was hilarious. Thank you. Hey, General Disarray. So he says, TD, what do you think about XLRE $30 puts for November 18th? It's a little bit out of the money. It's a little bit out of the money. If I was in XLRE right now, I would really want those 40 puts for November. 35 is probably the farthest out of the money that I would even be willing to go myself. For XLRE, even as overbought as it is, I think that staying close to the money on those puts is probably the best way to trade it. The way I've drawn XLRE is I drew a line across the tops and the bottoms to create an expanding megaphone pattern. And I'm playing XLRE for a very long, drawn out downside, all the way out till a bottom sometime in January or even March. I expect that the spring season will give it a bounce, and because that's usually good for the housing market. But that's also when a lot of inventory comes out to the market as well, is right after winter thaw. So that could actually have a bit of a rubber band effect, and it could bounce up and then get yanked back down really hard. So if I was playing XLRE for November, I would be doing 35 at most. 40 is what I would prefer to have. At the money is best.
Thank you, sir.
Yeah, no problem, my dude. All right, starting up Power Hour. Let's see what we got. SQs are just absolutely screaming. It's amazing. I love it. So
ATD
beautiful.
bond yields hit 3% on the 10-year.
I saw, yes, the 10-year bond yields. You can see it right here in the red for those over in YouTube land. We're at 3.03% on the 10-year. Very close to coming out of inversion. It's actually getting ready to catch up with the 2-year. When you see this red line cross above the 2-year, that means that we're out of inversion. Yeah, that's a bad sign. Bad. If you're on TradingView, you should be able to look at the 10-year 2-year treasury curve. That is T10Y02. Here it is. This is the ticker symbol for it. And this is available on the Fred database, but the ticker symbol is T10Y2Y, and this gives you the 10-year, the 10 and 2-year treasury curve, and set a nice big horizontal line on 0, and that is your inversion line. We are currently inverted. That's below the inversion line. That is when 2-year bonds have a higher yield than the 10-year bonds. When you suddenly see the 10-year bonds scream when their yield's going up, that means the stock market is about to crash, and it's going to happen within 12 months. Statistically. It's not a guarantee. There's no guarantees here. But when this has been a 100% accurate read on the market, whenever there has been an inversion on the 10 and 2-year bonds, it means that within 18 months, there is going to be a stock market crash. And this has been accurate every single time. Every time we have inverted since the 1970s when we started tracking this data, it has been 100% accurate at predicting recessions and stock market sell-offs. And we have the deepest inversion that we have had since the dot-com bust. People might not look at the dot-com bust like much because they look at the SPY, but don't look at the SPY when you look at the dot-com bust. Look at the NASDAQ. The NASDAQ is where the dot-com bust really freaking happened. Let me go pull it up. It's ticker NDX. Take a look at the NASDAQ and put it on a logarithmic chart. This is the dot-com bust. 84% collapse. From the top to bottom, the dot-com bust on the NASDAQ was an 84% collapse over 3 years. That is the bust. Don't look at SPY when you look at the dot-com bust. This is it. And that was the deepest recession that we had to date since the Great Depression. Was really bad. The tech bubble really, really hurt. And that was right when I grew up. Coming into my teenhood and, all my formative years. It was fantastic.
All you whippersnappers up in here.
Yeah, I know. I'm a young guy and I'm already trading in the markets. I got my own radio station. Ooh. That's it. That was the mark I was looking for. All right. I just took a look at my Apple bet. Apple got rejected. Okay. Yes. Apple is rejecting off of this 200 period moving average. I'm taking another bet on my paper trading account, and I am adding to my position. It fell below the 200 and it is rejecting off of the 15 minute. Oh, wait a second. Wait. Hold up. Hold everything. I'm looking at the 15-minute chart. I was waiting for the 1 hour. Okay, we're good. All right, so once this candle closes, wait for a red paint and a close on the next 15-minute candle. overall, you should basically be looking for a red close on this candle here. When you see a red close on this big wicking green candle that you see here, it's like showing a bull hammer. If you see a red close on this candle, that is a sell signal to go short on Apple, because it got rejected off of this. It got rejected immediately. It tried to recapture this support, and it's just like, nope, smack. Is Revlon really bouncing? I'm seeing people going crazy over Revlon in the chat. It's almost back to $8. Oh, wow. Yeah, talk about getting juked out. Ugh, God.
Yep, already did the cut and run.
That's silly. Ugh. You know, I'm so mad. I bet you it's Goldman's fault. I'm going to blame Goldman Sachs for everything. Yeah, for me, Revlon's not a trade anymore. I've got one call. I have one call just sitting out there, just in case. It's super cheap. I think the strike price is like $12.50. It was like a way out there call, and right now it's worthless. So if Revlon squeezes, I'll get a refund at best. But for me, Revlon is no longer a trade. I wish everybody the best of luck. But these Apple shorts is where it's at for me. I want to see Apple die. I hate your damn iPhones. Android master race. I'm going to alienate all of my iPhone, all my friends who use iPhones. What's happening Wednesday, the 0 or the moon? Dude, I don't know. Shout out to Kevin Perry. I don't know, man. I really don't. It could go either way. The bankruptcy courts are saying that anybody who has shares in Revlon can go suck a rock. So I don't know what that's going to do to the stock. Obviously, in the short term, everybody was like panic and then just sold everything. Where did all of the viewers go? All of a sudden, I just saw like everything drop from 300 viewers to like nothing. Did we just disconnect?
I'm something.
All right, let's go catch up with AMC and APE and see what's going on. Ugh, God. Yeah, APE's getting pummeled. All right. BBIG earnings. Shout out to Rob Massive. When is their earnings? I don't even know when BBIG's earnings are. I had to stop and admire the UVixie right now, which is back above $10. It hit a low of $8.70, and it's now back above $10 in just 2 trading sessions. All the Apple users got mad and left the stream. I wouldn't blame them. Once you insult somebody's Apple loyalty, you've insulted them personally as a human being. And you can't come back from that. I'm going to alienate half my user base forever now.
Do it again.
Apple sucks. I'm a double down. I have no regrets. Oh man. All right. What was I going to take a look at? God, I lost my train of thought. BBIG. I was looking at the BBIG earnings. Okay. BBIG earnings is not anywhere on my chart. Where is it? How come earnings is not showing up? I want to see it. I guess they haven't announced when it's going to be. So who knows? Right now, I like the price of BBIG. It's right there at $1 again. Honestly, if I had some more real capital to commit, I might consider buying more leaps in BBIG for $1 strike. Something like January 2024. Because I honestly think that the we've gotten several pieces of news from the from the Vinco team. One of the statements that was made on the Twitter call that I was participating in with Eric Finman, he actually said in the Twitter call when he was asked the question, "Will you change tickers or will you reverse merge BBIG and create a new ticker?" They're like, "No, we're not going to change the ticker. I haven't heard anything about this, but there's no plans that I'm aware of to change the ticker. We'd probably just keep it the same to keep things simple." And for me, that's great because that just means that there's no complications with a reverse merger or anything crazy like that. It'll just be a straight up like, "Yay, BBIG is now Vinco, and we're all going to trade under the BBIG ticker." BBIG and Vinco are now Zash Global Media, and we'll just stay under the BBIG ticker, and that would be beautiful. That would be fantastic for me. Okay, so Apple, I'm waiting for this candle to reject before I get into this trade. I'm scaling back into the trade as soon as I see this candle reject on the 30-minute. If I have to wait for this candle if this candle closes green and it rejects again on the next 15-minute candle, then I'll take an entry. But I got to wait for that rejection. I want to wait for the rejection. It's very important to me that I not rush the trade. Doesn't matter that this is a paper trade. I have the same attitude with my real money. Trade according to your risk to reward ratio and trade according to your risk strategy. Make sure that you are respecting your risk. It is very important. Okay, Viacom is paramount now. Thanks, Emmanuel Aloha. Shout out. Really appreciate that. Let's see if I can go and take a look at their chart. We were chatting about. Okay. Oh, this is it. This is it. This is the Archegos liquidation. This was the Archegos liquidation. That's awesome. Thank you so much. That's extremely helpful. So we're back on, guys. We can talk about how Bill Huang got margin called and just refused to pick up the phone. And this is what happens when you, as a hedge fund manager, do not answer your frickin' margin calls. This collapse was magnificent. So this was originally Viacom CBC, which is the same CBC that you watch on the news, along with their ownership in Warner Brothers and Discovery Channel. They all merged underneath Paramount Global. So, or at least that's the story, I presume. And the stock was trading at around $100. It's pretty close. I think it was like 80 actually at the time, because this is like this is the sum of multiple tickers merged into one. But Paramount Global was once Viacom, and when Bill Huang of Archegos Capital received a margin call in late March, the stock suddenly fell off of a cliff when his broker forcefully liquidated all of his assets. And it resulted in a collapse of absolutely everything. Paramount Viacom collapsed 60% over the course of the next month till the end of April. Let's see, this was the low point of April. From the 22nd of March down to the 20th of April, it fell 62%. And that's pretty magnificent. That's a pretty magnificent fall from grace. If you actually look at AMC's chart and GameStop's chart, funny enough, you'll notice that as the collapse was happening, the price was getting more and more volatile, and it went sideways while it had been selling off. So this was AMC, and this is GME. Oh, whoops, screwed that up. All right, so AMC is in the orange and GMC is in the blue. This fall was halted in its place because of while the Viacom fiasco was going on. So as this liquidation was occurring, before the liquidation had occurred, AMC and GameStop were running, and then they started to fall, and then they found support and went sideways as Archegos was being liquidated. And then later on, AMC and GME ran, with AMC running to $73 later on at the end of May and early June. So it's kind of funny. Let's go look at Revlon because I see everybody's getting so excited.
It's back up to 840. I was about to tell you.
That's funny. Well, if you didn't listen to me, congratulations. What a ridiculous day. What a ridiculous day. Boule. Oh, wow. Hey, I'm jealous of that call you bought. That's funny. Still got my one runner. If Rev closes green on the day, I'm going to be a little annoyed. If Rev closes green, I'm going to be mad. I'll be happy for everybody else, but I'm going to be mad at Goldman Sachs because there's always a reason to be mad at Goldman Sachs.
This is unbelievable. Gone 20 minutes and we're nearly recovered back to net zero.
Oh my God. Yeah. For me, Revlon still remains a no trade at this point. Like, just like leave the runner behind and just, cut losses. But wow, this was quite a ridiculous trading day. Oh yeah, hey, Casual Fool. Yeah, you're welcome. Shout out to Casual Fool who just recently joined the Hype Squad, thanks to his really killer designs for T-shirts and fun things that we're going to be adding to our new up and coming merch store, which is not quite open yet, but we're getting there. We're very very close to merchandise launch day. We're actually going to have some really nifty, neato little coffee mugs and T-shirts and hoodies and stuff for Hell's Trading Floor. So if you want to show your HTF bling, that'll now be an option going forward here very soon. Creditor's objective, and it was a massive nothing burger. So was it a false article? Morgan Stanley disclosed that it increased its stake in the cosmetics company over the last 6 weeks. Double-digit rally moves have been frequent. Well, that's not really news, Seeking Alpha. Citibank is suing Revlon. Does half of Wall Street wants Revlon to die and the other half wants it to go to the moon? This is just silly. You know what? Buy a straddle and just go to bed. That is my solution for this whole thing. Buy a straddle and go to bed.
Revlon just went green.
Oh my god. Revlon's up 2% on the day now.
This is what I was talking about earlier, bro.
What
How you
is
could get
this
a dip like
silliness? What is
that.
this market? Where am I? What
If this
planet have
gets
I
back
landed
to
on?
9 and 940,
Easy, easy,
Oh
lemon,
my god.
easy.
And Boule bought the $19 strike calls and he's up 150%. Dude, you're
I bought
silly.
a few of them. I mean,
You're silly as hell. Get out of here. Somebody go kick Boule. Kick him out. Oh man. You're
I mean, you
silly.
gotta make money somewhere, bro. Come on.
Wow. Bravo. Bravo. I have 2 losing paper trades on Revlon today, and Boulet's down after he buys a call at the bottom of this freaking kill candle, this murder crime candle. He's like, "Yep, I think it's a good buy," and just takes off in the other direction. You know what, Boulet? Can I have a Boulet algo bot? Just like whenever Boulet buys calls on something, I'm just gonna automatically follow the trade.
This is hilarious, bro. Like,
It is
what
silly. That's silly as hell. You know what? Let's catch up on Curve because I haven't looked at Curve. Oh, nice. It's basing. Okay. This is good. This is what I was waiting for on Curve. The setup for Curve is it's been a little bit weird. Just because the channel for Curve is still getting set up. It's honestly doing like a parabolic setup. You know what? As a matter of fact, I'm not even going to trade this channel. I think that Curve is probably going to do something else entirely. Let me do a fib extension on this. Let's go figure out where this thing's going to. Okay. All right. So this is the 50 where it made it to. Next step is the 100. Okay. Let me double check this with a retracement. Okay. Yep, so fib retracement. All right, the 161 is the loftiest target. The 126 would be the next natural target. Okay. Yep. I like the setup. All right, so Revlon's got me all kinds of screwed up. All right, so Curve. I've got several price targets lined up here on Curve. I know we don't normally do price targets, but I've been trading on fibs, so I'm just going to call them what they are, okay? Just, remember, keep in mind, no financial advice here. We don't do that. Revlon has 2 possible scenarios going for it that I see right here. So I've been watching this arc setup, right? And then it had a retracement. So what I'm kind of anticipating Curve to do is to do more of these curves and then do more retraces and then do them again and again. And eventually what this will end up looking like is a big parabolic arc pattern as it squeezes. Curve is a good fundamental play because it has a very low price to earnings ratio, very good book to price ratio, and very low debt ratio. It's got good debt to equity. So the company itself is very low on its debt. It's got a good price versus how much it's earning right now, and their revenue targets are getting hit. So fundamentally, Curve is improving, even though the company is way undervalued. So right now, Curve is a good setup for a squeeze just because of how heavily shorted it is with, I think, 30% short interest of the free float last time I looked. We can take a look at the Ortex here in a minute just to double check ourselves on that. But what I have observed is that this stock moves in parabolic formations where it will do a parabolic move and then it will retrace. So let's actually take a look at the trend base fib extension that it did. Let's see. All right. Let's do it from this move. No, that's not quite right. That's close. That looks about right. Okay. So this long move from end of February, 1st of March-ish, curve moved down to this price at around $3.80. So a pretty long bear channel. And then it broke out and it immediately took a big jump and retraced to this would have been I'm using the trend extension in reverse now. So I'm all confused. And now somebody's calling me. I don't know you, dude. All right.
It was me.
All right. So this thing retraced back to almost to its top here. It touched the 2360, and then it retraced on this up move back to the 6180. So now I'm going to set it up just the opposite, and I'm going to say that curve will rebound and form a pennant on its 38 fib level. So if it hits this fib level and holds, then the next target will be the 6180 and the 7860. Okay, that'll put us back at our previous resistance where we started at. Okay. All right. These are all pretty good levels. I'm pretty happy with these. All right. So now we look at what Revlon, or Jesus Christ, I keep saying Revlon. It's Curve. Torrid Holdings. What I'm waiting to see is for this triangle to play out. So the triangle is right here. It's this ascending triangle. Now it entered to the downside. So this could just be a bear flag. So I'm waiting for confirmation in one direction or the other. If you're trading this like a bear flag, you're waiting for it to break out the bottom. And then it'll head back down to this area and then maybe reach its previous resistance here. So if you see the breakdown to the downside and you get confirmation candles outside of this bearish, this bear flag, then that means that you should go short to roughly $5.18, maybe $5.20 to be conservative. However, if it breaks out to the upside and breaks out past $6.20, then you see that there is still some strength in this and you would be trading this bear flag on the hourly. It's a very large one, very long tail. But if it does break out, then you would want to play that to the upside back to the top of the flag. So this has some good potential. And I understand that my fib levels make it a little bit optimistic that it can reach here, but these are the technicals that I see. This is the chart that I'm trading in front of me, and I'll be carefully watching. Is it going to break down or is it going to break up? So I'll go ahead and set an alert on this. Give myself fair notice. And if it breaks out, then we expect it to run to 848. Sebastia, shout out. Lomotive just launched its browser-based app version, so no need for downloading now. Dope. I don't use social media like short-form content, but I know other people do, and that sounds cool. Oh, look at that. EOS Energy. My EOS Energy play started coming back. Oh, wow. That Head and Shoulders played out a lot better than I expected it to. This is a clean energy play that I was watching for a big rebound. I think that the energy stocks are going to run pretty soon, especially as oil gets more expensive. Which, by the way, if you haven't heard, oil is about to get expensive. But crude oil has been basing. If you want to play for the short term, I'd probably go with like Exxon or Chevron oil, or maybe even Occidental Petroleum, since Warren Buffett loves it so much. But U.S. oil is about ready to hit this base, and it's already bounced off of the bottom of this megaphone. So I have a feeling that U.S. oil is going to go to the moon, and that's going to have a good effect on the energy sector. It's probably going to put a lot of pain on. It's going to put a lot of pain on the global market. So anything that is reliant on oil, especially logistics, is probably going to sell off. Semiconductors are probably also going to sell off along with it, but for different reasons. Logistics by themselves are just going to make it really, really difficult. This is also going to be a nice inflation hedge. So betting on oil going up is an inflation hedge because as oil goes up, it causes inflation, oddly enough. Go figure. So if you're looking for an inflation hedge and you want to make some really good money at the same time, betting on barrels of crude oil is a pretty valid option as a strategy. The other thing that you can do is to bet on the companies that produce and refine it. So ExxonMobil. I talked about this in my video previously, and ooh, we did get that breakout. I didn't see this yet. I should have checked this earlier on today. This is actually really, 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 really cool. We have a confirmation candle breaking out outside of the ExxonMobil bull flag. Yay! So, okay, I'm officially bullish on Exxon. I'm probably going to play this one to let's see. I'm going to take a big take a big swing on this one. Cuz it's a paper trade. Why not? Let's see. I'm going to set my risk to the bottom of this last move. And I'm going to go for, we'll take profit at 119. That's close enough. This is a big swing trade. Let's make it fun. We'll do a 4.5 risk to reward ratio. And I will do a 250 bet. There we go. Slight price improvement. $231.51 is my risk. My take profit is at around $1,200. Well, actually, I'll lift this. I'll modify this just a little bit so it's a nice, even 1,200. There we go. Oh, I guess I have to account for commission fees. I did set commission fees in my paper trading account. Just keeping myself honest. Okay. Let's go check out what's going on elsewhere in chat. What are you up to, chat? How is everybody else making money right now? Talk to me about the money you're making.
It looks like APE halted again.
Did it really? It halted up. Ooh, what? Excuse me? Ape, what do? What do the ape say? Hello. That candle was going to engulf. It halted on this candle, but not on this candle. Do you excuse the fuck out of me? That's an engulfing 3-line strike. There's a reversal signal if I've ever seen one. Was that you, Insano, that called that out?
Yeah. Also, the MACD on the 3 minutes kissing. They've only traded 51 million shares today total.
Well, there you go. You know what would be really cool? To have an extra 100 shares of Ape. That would be what's cool. Ape has been halted. This is hilarious to actually read all of the tickers. Halt Ape.
What time frame are you looking on, TD?
On this one is a 5 minute. There's a 3-line strike on the 5 minute. There's actually been multiple 3-line strikes on this. There was this one here, and now we got another one. Except they halted on this one. So now I'm expecting it to gap up and teleport somewhere where I will, of course, get an absolutely awful fill. Ugh. You know what? Silly apes. Stonks are for Wall Street. That's what all this shit says to me. The number of times that this ticker has been halted down today when it's actually should have been halted up is fucking silly. Pay attention, everybody, because you're watching discounts happen in real time. Well,
unhalted.
There it is. It's unhalted. Screw it. I'm buying 100 shares of Ape because I want them, God damn it, and I'm not going to sell it for shit, even if they are just paper shares. I've got some real ones, though, so don't you worry about me. But even if I only get to participate in this silliness in spirit, at least while I'm on stream, I'm going to do it. Let's do 1,000. Nah, that's too expensive. Always respect your risk to reward ratio, even if it's play money. But we'll just see how that 3-line strike pattern plays out for us. Who knows? Maybe we'll actually time the bottom. We will have caught the falling knife. Pooley Pampet. That's a pretty interesting name, sir. Could you please fill us in with what's going on with Ape? Thanks, pal. Sure, pal. So Ape is getting blasted right now, and I'm trying to understand why, because it's been halted. What's the count up to now, even? Like, has anybody been keeping track? Like, I feel like I need an umpire's... I feel like I need a clicker counter, just to track the number of times that this stock has been halted.
It's at least 6.
Yeah, it's been at least 6. The number of halts on this thing is absolutely ridiculous and absurd. There's no reason for it. And it's because of issues at the exchange, and the price keeps laddering down. And I think that what is actually happening is there is a mad dash panic of people trying to quietly accumulate shares, and all of the shares are going off to the hedge funds that have to go and deliver on all of their short bets because they naked shorted the living shit out of the stock AMC. And oh, look at that. That 3-line strike is playing out pretty nicely so far. But in any case, I think that what's happening to APE is they're dragging the price down as much as they can in order to accumulate shares because they need to deliver them, and they have a very small window of time that they can deliver them. So they need to get as many of them as possible, and they're trying to convince everybody to sell out of their shit. And right now, this is the time to be buying because look at how good it is. If AMC was trading at $10, I would want it so badly. I mean, it is trading at $10 actually, but only because of the split. APE right now is causing massive headaches for Wall Street. So if you want to add to Wall Street's headache, buying APE shares is actually a pretty hilarious and possibly effective way of doing it. Obviously, still respect your risk, still only trade what you're willing to lose, but there's some hilarious stuff about to happen on this stock. I feel it in my jimmies. We'll go see. We will see.
Good amount of volume.
It is a good amount of volume. Look at her go.
I count 11s and 11 halts today.
11 halts?
That's what it says in my newsfeed. Yeah.
Oh my god. Oh my god. That's ridiculous. That's ridiculous. That's stupid. You know what? I think that market makers are bluffing. I'm calling their bluff. Market makers, you're bluffing. You don't have shares. You do not have shares. Unicorn, I love that gif. It's so obscene and I cannot share it, but I love it. Just know that I love it. Look at Apple go. Did I miss my entry? I was laughing so hard at what's going on with APE. Yep, I kind of missed my entry. We'll chase. We will chase because it's such a good setup, isn't it?
Oh, let's go, Abe.
It might go green.
Ooh, Abe going green. Let's go. Sheesh.
All right, there we go. All right, I've scaled into some more Apple shorts, and I'm going to just let that sit there. We're going to ride that swing all the way down to the 200 moving average on Apple. That's where my take profit's at. And now we're going to go watch Ape go do Ape things. Ape's going to go ape shit. Look at it go. Look at her go. I love doing this shit. I wish I could do this every day. All right, guys. Here's the plan. I'm going to buy the next squeeze ticker. And step 2 is a little bit fuzzy, but then step 3 is profit, and then I get to do YouTube every day. Wow, look at it go.
Sounds great.
Doesn't it?
Yeah.
Sounds like such a solid plan. I knew I'd like that bullish divergence. Look at Ape go. That 3-line strike, I saw it and I was like, that's it. That's the winner. Oh, look at that. There's a 3-line strike on the 30-minute chart too. 1, 2, 3 red candles and one big ass green engulfing candle. Watch this thing close green. engulfing these, if it engulfs both of these, that's super bullish. This thing will be screaming past $18, the AMC APE Collective. Let's go catch up on IWM and SPY. They're diverging. It's happening. It's diverging. IWM is diverging from the SPY. IWM going up while SPY going down is so good for small cap stocks. This is fantastic. Watch the Qs sell off too. Ooh, look at that big red candle on the Qs. Sir, this is a. I know that we've had some rough spots today, like we've had some rough trades, but I really do have to say I'm so pleased with how today has gone. I did warn people that we should probably expect to see AMC trading down at $8. I'm so happy to be wrong. It was trading better than I expected. It hit the lowest point today at $10.35. Was that the lowest? Look at that green candle. Go, baby, go. Hey, Carlito. My paper account is in TradingView. Yeah. If you open up the trading panel in TradingView, there's a paper trading account that you can open right here. All you got to do is click connect. I think there's like a really short setup thing where you just like go through your settings and set up you can set up like the commission and your starting initial margin. But yeah, it's super simple, and you can start trading on a demo account today.
998 was the low of the day for AMC.
998. Cash is currently experiencing high volume. Please try again soon. Captain Insano, shout out. Captain Insano was going to try to buy some APE real quick and got stopped by his broker at Cash App. Either it's just a coincidence or a bunch of people thought the same thing. Wow. I don't want to rag on all of the other like small time brokers, but that's one of the reasons why I have Fidelity. Like I don't trust those fly by night brokers between Robinhood, Webull, Cash App. I'm on the fence about Public. They seem legit, but I still don't know because they're really new. But I feel good about Fidelity. TD Ameritrade, I think, are kind of shady, but they're a real broker, and FINRA is still watching them like hawks with microscopes. So I at least feel a little bit confident with TD Ameritrade, but Fidelity's the account that I prefer. I just really hate their trading interface because it sucks. But real brokers will not have these issues, and I like having the benefit of being able to call my broker and demand information and have them on a recorded line so they can't lie to me without risking going to court with me. That makes me feel very comfortable and fuzzy inside. Okay, APE is getting pummeled again. Should have seen that coming. All right, this red candle is the strength in her. Look at the strength of this APE. Interactive Brokers is another good one. I think they're so expensive, though. I really think their commission is quite shit. And unless you pay for their data feeds, which are like $1,000 every year, it's such an expensive broker to be with. That's my big complaint with IBKR is I think they are so expensive. Their data feeds, you can get the same data feeds that IBKR sells for $1,000 a year at Webull for $2 a month. And that's just stupid to me. Oh, they're trying to hammer it down. They're trying, and somebody's just buying up all of those shares. They're just scooping them all up. Someone's trying. Let's look at the volume on this. Look at the volume grow. 2.5 million, 2.1 million, 550,000. They're trying to kill this thing, but they're just forming a bull flag instead on the 5 minute. Probably looks better on the 1 minute. They tried to make this into a kill candle. Look at the volume. They're trying to make this a kill candle, and instead it's just completing a bull flag. For those that are looking to see it, here it is. It's actually more like a bull pennant. There's the breakout. Ape's going. Ape's gonna go. Ape's gonna launch. Ape is about to launch. Look at it. Oh, this is funny. Oh, this is so funny. Look at it go. The 1 hour is forming a 3-line strike. We have a 3-line strike on the 15 minute, the 30 minute. Wow. If this candle swallows all of these little red ones, that's extremely bullish. We're going to attack the VWAP. We'll be trading back above VWAP before close today. I just want to say for everybody who said to sell Ape, fuck you. You were wrong. There, I said it.
Very eloquent.
Appreciate that. I worked on my elocution.
Good job, sir.
Oh man.
Okay,
Now I'm
with the
feeling
Cardinals.
now I'm feeling salty about this paper trade. I just should have taken away the stop loss. Nah, you shouldn't do that. Wait for the better entry. That's what you do. Take your stop losses, wait for the good entry. And then once you're way up, then take away the stop loss. That's a joke,
Hey,
everybody.
TD.
Yeah, what's up?
Rob Massive in the YouTube chat was wondering if you could explain a 3-line strike.
Oh, yeah. 3-line strike is very simple. 3-line strike is any candle pattern where you have 3 large-bodied candles moving in the same direction and then a big engulfing candle in the opposite direction. So this is a bullish 3-line strike. You have these 3 little red ones and then one big engulfing green candle. That's a 3-line strike. Very powerful reversal pattern. You play these to the upside and you enter at the top of the candle. And you can also set a scale in buy. You set another limit buy halfway down the candle or at the red candle's close. And that way you get an initial position at the top and then you can get another sniper position in the middle and then you set your stop loss below both. You set the stop loss below both bodies of the candle. Okay? So that way you get an initial position right away just in case it keeps going. You get a bigger position with a small risk to reward, a really small risk, large reward rather, and your stop loss is super, super tight. And you can trade these on any time frame. You can trade these on the 5 minute. Here's one right here. This is the 3-line strike. You can trade it on the 15 minute. Again, 3-line strike. It's the same way. But I like to trade them on the long-term time frames because if you look at the 5 minute, you had one here, 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 here. There's just too many of them, so there's a lot of noise on the small time frames. That's why I like to do my 5-line strikes on the 15 minute or the 30 minute. That's how I trade them. Hopefully that helps. It's a very, very consistently good pattern.
Thank you, sir.
Yeah, anytime. Now that we've cleaned all that mess up. Look at her go. Look at her go. Ape just makes me so damn proud to be an ape. My Apple play is panning out beautifully as well. The only thing I'm currently down on right now is my Tesla short. Looks like Tesla found some it found just a little bit of cocaine and started going on a run. It's probably best that I do not have a radio station The FCC would be sending me a fine in the mail every week. Like, here you go, Mr. TD. Thanks, guys. You can't talk about cocaine on the radio. You know that. Yes, sir. Ape closes at $6.66. It would make my week. It would just make me feel all kinds of warm and fuzzy inside if Ape closed at $6.66. If it does, oh God, please let it happen. I don't care. I don't care if it could have been Moas today. If it closes at 666, I will just be so happy. It looks like it wants to. It's too funny. I can't handle it. My eyes are just fixated on Ape now. Don't you do it. Damn it, Goldman. Let me get some cactuses in the chat. We're going to threaten Ape that if it falls too far, it's going to get a cactus. We're going to threaten it into submission. Do we have cactus emojis on TradingView? Ugh, they missed out on the best emoji. I'll just give it Tux the Penguin to make him feel better. Actually looks kind of terrifying. You can tell that I've now officially gone off the deep end, that I'm putting Tux the Penguin on my TradingView chart. Damn it, Goldman. Did Matt Kors say to sell Ape? Oh, I'm sorry, Matt, but I think that's kind of fucking stupid. I know that Matt has he's got his own reasons for his trades, and maybe he said that, maybe he didn't, but I don't think that selling Ape is what's good for the company. If you're bullish on the company and you're bullish for a squeeze in AMC, why would you not want to help the company out by improving its financial situation by buying Ape shares? That's the equity that they'll be able to trade. They'll be able to sell that equity for money and get out of their debt. And if that happens, then AMC is more likely to squeeze. We got 2 minutes for Ape to close at $6.66. And if it happens, then I don't know what's going to happen, but I'm going to feel really good about it. Did I not have a play in NVIDIA yet? No, actually, I didn't play NVIDIA. I was bearish on the semiconductors, but I just picked Tesla instead. I have only so much capital to commit, of course. But I did recommend a short on NVIDIA, and yeah, it looks, if you got in, I had talked about it on Thursday, or maybe it was Friday. I don't remember. But if you did end up going short on NVIDIA on Friday and you swung it over the weekend, I'm sure you'd be very, very happy. It's down 8%. Just on today, it's down a full 4.5%. So today was a very good day to be a bear on NVIDIA. Semiconductors overall, I think, are in for a lot of pain. I've got my bet on. I'm short on Apple and Tesla. I might have made more on NVIDIA, but that's fine. That's okay. I'm not trying to hit the perfect ticker every time. I'm just trying to stay exposed to the sector, and honestly, like shorts against SQs would be phenomenal. Or rather, short on the Qs, long on SQ. SQs is inverse of the Qs, and yeah, like look at this one, 14.5%. Tell me that's not a beautiful trade. That would have been on Friday. That's beautiful. Hitting $39. I actually would be swinging SQs all the way out till September. But I've already got plenty of short bets on the SPY, and I'm long on DRV. I'm looking to play the VIX as soon as it gets a little bit of a retrace on it. There's plenty of things to use to make money. Ding 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 ding. That's the bell. I'm so depressed because it did not close at 666. It closed at $6.13. I'm so sad now. I was hoping that that APE would do it for me, but it did not. APE, I'm so disappointed in you. You could have been great. You could have closed at $6.66, but you just had to go and be selfish. But that's okay. It was honestly a better trading day than I expected for APE, because honestly I expected it to sell off way worse than it did. The long-term situation for APE, though, I think that when the settlement, once we get past these growing pains with the settlement issues, and if enough retailers are holding on to their APE shares and refusing to sell them, it's going to create a problem for all of those shorts who really, really, really need those shares, because they're going to have to deliver those in T+2. So that's Tuesday morning, so tomorrow. They're going to be overdue for delivery. And if that failure to deliver stays outstanding for more than 13 consecutive trading days, then they'll be subject to forced liquidation. I have a feeling that APE will end up on the threshold list faster than any other ticker ever has since its debut onto the New York Stock Exchange. So if you see APE, go on the threshold list on Friday. Expect some serious, hilarious volatility the following 2 weeks, because it's going to get ridiculous. If APE goes on the threshold list immediately this week after 5 consecutive days, it's because of major failures to deliver to such a degree that more than, it would have to be, let me do the math. It would have to be at least 2.5 million, actually 2.6 million shares would have to fail to deliver on APE. And if there's that many failures to deliver in the first week of its trading, that means that they do not have the shares to cover. And it proves the thesis that AMC was being naked shorted, because there's no reason for APE to fail to deliver on a T+0 settlement day. Because of its debut onto the New York Stock Exchange, it must arrive in everyone's portfolio. And right now, the exchanges are halting. They halted it, 11 times at least? Correct me if there's a new update, Dave.
No, that looks right.
Okay, so 11 halts on APE today. There's no reason for that to have happened. The volatility wasn't even there. The stock moved down, what? It opened at 760. I'm leaving dots everywhere. That's why this is doing that. We closed 17% down. Okay, so it was kind of bad. Oh, that's 10%. Well, anyway, the swings weren't that much. We had several halts coming out of the initial trading day at the bell. We had 2 halts back to back, and that price discovery period showed us selling off immediately after it went out onto the market. I assume because of everybody that just decided that I don't want APE shares, I want AMC shares, and they just pouted and they sold out of their positions. And I think they're going to be sad. I think they're going to be really sad if APE ends up squeezing and they sold those shares just because they're like, no, I don't want APE shares. I want AMC or nothing. And Adam made our shares go down to $10. And if they want to be upset about that, then I guess that's their prerogative. But Overall, APE is the equity that is going to provide AMC with options to finance itself into the future. So, okay, APE halted 10 times and AMC halted 3 times. Okay, thank you very much. Close Trade 13, shout out. Adam Aaron didn't rug pull anybody. Your equity's still there. Like, you got shares of APE and there's AMC equity separately. AMC went down because its equity split off into APE. He's not going to dilute this year. He's already said that in his 8K filing. He made that a promise, and he said that there's no plans to dilute at any time in 2023. If they need to make any kind of dilutive move, I'm assuming he's probably going to sell warrants, if anything. And warrants are bullish anyway, because when you sell warrants to somebody, the investor pays the money to the company up front so they can use them. And the warrants give them the right to exercise at a certain strike price once the stock starts trading above that price. If Adam Aaron sets a target for those warrants to be eligible for exercise at like $20 and it's like a few million shares, then that would be fantastic for the investor. It would be fantastic for AMC to get the money up front, and they can start attacking their debt. All of these situations that AMC's gotten itself into is all because of the debt. The debt hanging over its head is the one thing, the big anchor around its neck, or the albatross around its neck, however the saying goes. AMC's debt is the thing that's holding it back. If you take away AMC's debt and they manage to get out from underneath it, there's no bear thesis against it anymore. As soon as AMC gets out from under its $9 billion of debt, it's free to go wherever it can. It can be the best stock that it can be, and it can go to the moon if it wants to. All right. Well, let's go catch up with the market. So the IWM diverged from the SPY in a pretty spectacular fashion right there towards the end of the day. The SPY did move up a little bit, but at the moment, it looks like IWM is actually outpacing the SPY, or at least outperforming it slightly. That's at least intraday, which is good. I'd like to see that. The small cap tickers outperforming the SPY is good news for both my put position and everybody's meme stock position. Because if you're in a meme stock, 9 times out of 10, it's probably trading on the Russell. Weber had quite a spectacular move today. I saw sold off, and it's now retraced back to, what is this? Oh, I am messing up my APE and AMC chart. Let me go switch to something else. Yeah, I'm done looking at Apple. We'll do this one. Now I can't remember what I was going to look at. Weber Grills. There we go. Nice bounce off of the 50 on the 30-minute moving average. Translates to the 25 on the 1 hour. On the daily, Weber it got rejected by its 200 moving average, and it's bouncing off of its 20, which is getting ready to cross the 50. Weber actually is making a very nice setup. Their earnings were really nice, by the way. I heard the guidance on Weber from its earnings, and I think that it's actually got a really nice setup. I don't know about a squeeze, but just on a fundamental basis, if the company keeps improving its earnings and gets its sales up, it would be good. It would be good to see Weber Grills return to its kingly station as the king of grilling apparati. Let me catch up with the other tickers, and let's actually review the bonds and see where they closed today. Where are my bonds? Here they are. Okay. So the 2-year had a really big day today. The 2 years had a very bad day. The yields went up 2.6% almost. The 10-year went up 1.8%. In terms of basis points, the 2-year went up by 8.4 basis points, and the 10-year went up 5.3 basis points. So the 10-year is still lagging behind the 2, but it's beginning to catch up. The fact that the 2-year has now crossed 3.3%, this seems to be a pretty consistent level where yields, when we last reached this point, or we threatened to reach this point, when 2-year yields crossed the 3% range right in October, November of 2018, it actually resulted in a big crash in the market, and that was due to a collateral crisis. So there was some pretty serious fear going on in the market at that time because of a big issue with the Fed, reverse repo, and the collateral crisis of 2018. That is a long story. That's a video in and of itself. So if you want to know about that, you'll have to check that out yourself. But it's worth a look if you're interested in how badly over leveraged banks can get and how just one little hiccup in the repo market can really screw them up. And now we're seeing the bond yields start to return to those levels in very quick order. So the bonds are ripping in their yield, which basically means their value is dropping rapidly. Existing bonds values are dropping rapidly. New bond yields are going up fast. So this is going to really hurt the bond market, and it's going to translate into a major sell-off in the stock market once these yields keep going up. If I go back into my history just a little bit, let's put the SPY on here, and we're going to look at how this affected the stock market. So right here is where the SPY, or I'm sorry, the 10 and 2 inverted back in 2006, and then it nearly inverted again in 2007, and then the bonds for the 2-year yield started to drop along with the 10-year. It was after they started going absolutely crazy. Like the 2-year went nuts. And then after the banks started running into collateral issues, there was a huge drop in the yields of the bonds market. And then they ripped again right before the big major sell-off. So you kind of see that happening here, where we had the bonds going crazy going into 2018. And then there was a big crash in the market right here. See this yellow sell-off? The bonds went nuts, stock market went down. And then the bond yield started going off and going down, and the stock market went back up. And then COVID hit, and then everything crashed. And now the bonds have been going absolutely nuts, just yields going crazy. While the stock market went up, this is very unusual. And now that the bonds have started to hit their peak and they're getting really volatile again after this consolidation, I have a feeling what we're about to see is the 10 will just jump past the 2-year yield, and then we'll start to see a sell-off in the bonds as the stock market tanks. We have a lot of pain ahead of us in this market right now. Let's check up on DRV. Oh, it closed the day at $40? Nice. Oh, it's at $40. It closed the day at... What did it close the day at? Oh, it closed the day at $40. Okay. SQ is very nice. Let's check on Apple really quickly. if you didn't have a confirmation candle on Friday, this is your last call. Apple is coming down. I'm estimating that Apple's going to, in the short term, reach its 1 hour 200 period moving average, which is going to put it at around $160 thereabouts. So you can play this to the downside down to here for a 2.5% drop. That's a pretty short term swing. If Apple keeps selling off at this rate, you'll hit it tomorrow. Amazon, I'm also estimating a big drop. Wow, that's a huge gap. So Amazon gap down. Amazon gap down almost 2%, and it's down 3.5% on the day. Amazon, I think that Amazon might chase this gap and actually return to $122 and go back to its pre-earnings valuation probably within the next 3 weeks, actually. JP Morgan Chase, indecision candle, so be careful here, but I still think it's bearish. I think it's going to come down. Meta sold off 3%, and it was trading in a channel, so it looks like it's about to re-enter the channel. I would actually be interested in trading Meta down to $100 by the end of September. It's sold off pretty badly already, but I still think it has some room to fall. Facebook is not in good shape right now. Semiconductor stocks still not doing well. Nvidia may have already had some of the worst of its sell-off, but I still think that it, in the short term, at least until the end of September, can hit 155. In the long term, if we kick off some shit with China and Taiwan, then semiconductors are really going to hurt. Fuel sector, I'm bullish on ExxonMobil. I entered into this paper trade, which is pretty much even, but we only just started it. The dividends just paid out. They had a really good earnings, and oil is about to go to the moon. At least I think so. I'm sure there's plenty of other commodity traders that think so too. But if you're tracking the oil sector, it's been basing for a while. And inflation's still out of control if you haven't heard. So right now, the drop-off is pretty severe. And we've got this nice double bottom on the U.S. oil commodities. We're at $90 a barrel. I'm going to just go ahead and put a conservative target at 120, but I think that it could actually get up to 140 by the end of the year. And if U.S. oil is going to rip, then pay attention to some of these oil plays. Just go ahead and I'll give you some time to take a quick screenshot of this. There's a lot of these tickers that are in. Some of them are REITs that are tied to oil, but things like Indo. I used to have IMPP on here, but I think it's further up on my squeeze bets. IMPP is one. Houston American Energy Corporation, or HUSA. CEI is a shipping company. They're a bit memey, but still valid. Nine did really well, and HUSA is already starting to price in a rise in oil. So I think that pretty soon oil is going to start taking off. Tough Bill got hammered. I didn't see this until just now. I haven't been watching Tough Built, though. There's plenty of other people covering it, so you don't need to hear me chasing after it. The VIX cracked through 24 today, and it's retraced back to 2381. So the VIX went nuts today. That means fear is coming back to the market. So expect some more red tomorrow in the market. Hopefully the IWM can outperform the SPY a little bit more for a while longer. Just enough that we can see some of our meme plays play out. And Tesla is the one other one. Gotta wait for this bear pennant to finish playing out, but I'm pretty sure that we're going to see Tesla make another race for the ground floor. Short term, I'm betting on Tesla to go to 820 before the middle of September. Long term, I think that Tesla could end up crashing after it split and going all the way back down to its pre-split valuation of $400 per share if their Q3 earnings are really, really, really bad, which I think they're sure to be. I think that's all that I got time for today. I'm sorry, guys. I can't take any ticker requests today. I have to get back to work because I've been doing a full day stream basically almost since the bell. So I do have to run. But I appreciate everybody coming in and being a part of the conversation. Hopefully, we can do this again very soon. Keep an eye out for some of these tickers that I've called out already. Keep a close eye on the semiconductor and the oil sector. If you see semiconductors going down and oil going up, then inflation is going to get worse. And you're probably going to see bond yields increasing as well. And that's going to basically put pain on everything that is tech, logistics, and housing. All of those things are going to get hurt pretty badly. Retail sector is probably going to feel the pinch too. But that's all I got for you guys today. Thank you guys so much for tuning in. If you enjoy the stream, be sure to leave a like on your way out the door. Subscribe if you want to see more, and consider joining us at Hell's Trading Floor. You can join through our Patreon link at patreon.com/thedevilsbroker, or join our Discord at discord.gg/Hell's Trading Floor, where you can sign up through the join instructions provided when you get in.
Hashtag TD for president.
No, I'll never take the job, but you're very nice to offer. You could not convince me to sit in that White House. I'd be assassinated the day before my inauguration.
Not by me, sir.
All right. Thank you guys so much for hanging out. I look forward to seeing you guys next time. Until then, have a hell of a night.